Good morning, everyone. This is Rose. Today is Friday, June 2nd. All right, let's begin. So let's see. Let's start with okay, so we have a monthly bar already very bullish, and it is still trying to reach this high. Since we went above this month, so I think bulls are still pushing furthermore. And the weekly is still trying to reach this moving average that we talked about, which is 100 weeks moving average. I'm going to adjust this because we're now, no, originally it was like this, but I lowered it down to the May 19 high. But you can see that we are already breached that, and we're above the, we are above the February 2nd high because we're trying to reach here, but this is my target, so I don't know if we're going to keep pushing or are we going to trap the bulls at these highs. So market is also above this bullish candle, so they are still trying to push higher and higher, so I'm going to adjust this. On the daily, we have, you can see, bad high one, but they bought above it, and we made a new high, so pull back, and we're going high. Now the market might be looking for resistance here. So if I actually measure this way, we still have target. Now it's very interesting is on here we don't look like we went above the February 2nd high. That's because I'm using two different templates. So remember, this is RTH, so that it's not really showing you that we actually went above it. Okay, so when we open up, we're going to open up somewhere here. So we're already we're already touching this trend line. I can also change it and make it this way. Then we have to break out above, which we are, and then continue climbing, but I think I'm going to take those into consideration. Yeah, that's better. So market is bullish, and bulls are looking for continue to go higher. Bears, on the other hand, still seeing this as possible trading range highs, and they want to trap the bulls. But market is trying to reach this probably August high. Now I'm not sure if we're going to get there. There's this August 26th high is we might actually test. There might be some stops there. I don't know if we're going to be able to trap these bulls, but if today gets continuation, we might actually keep going higher and higher. But I'm expecting some kind of a pullback. Okay, so and look for buyers maybe on the 5-minute chart before we continue. I think the buyers are waiting down at the pullback from yesterday, so is at the end of the day. If we actually test that and then continue to go higher, we could get a breakout. We might get a measured move to the upside. But this is what I think is market is trying to do. But I need to adjust this a little bit. This is messed up. So hold on. This is where I think the bulls are ultimately trying to reach. Okay. But first, the August 16 high, is an important level. But they're going to have to do a lot of breakout. They have to print a lot of bull bars. So we're going to open up above February 2nd high. That makes us very bullish. On the 1-hour chart, actually Globex chart, I have targets. So on the daily, I'm still looking for market to reach, let's see, it is 65 or 55, and then into 60, and then furthermore continuation into 85 area. Now on the Globex charts, we already reached is two times the reward, and here's how I found it. It's institutional. When I see any kind of squeeze, I look for institutional pattern, first going higher, then coming down, and then the breakout. So I will measure that. This is the breakout. So that's 1-to-1, and that's 2-to-1, which we reached at. Okay. I do have hourly target here is for bulls, and then furthermore up is this is the daily. So I combined this rather large area for resistance, but this is where the market is trying to reach. We already did that pullback with a catalyst, which is the employment situation number, came out on 8:30. So that pullback we're looking for, and this is the pullback that I was talking about. Now, if this bar closes up here without making a upper wick, okay, so we may not get that double top. And in fact, we could actually break out, and the count would begin again. You have 1, 2, 3 push. Pullback is we reach, okay, so this area, think of it as a 1 pullback, 2 pullback, and maybe a complex 3. So this leg started somewhere here, market comes down and tests, and then trying to go higher. If we take out that high, which right now we're trying to test it, because when market is this bullish, it always wants to do a quick pullback, gather up buyers, and then trap the sellers, and then goes retest that high again. So goal is to test this high and then continue to go higher. Okay, so what can you do here? Well, you could measure quick measured move. That's not what I would take. I would take this. So you see how close that's 1-to-1 target to the hourly target. So I think that's what the market is trying to reach. Now, what if we come down from there? We might very well. In fact, we could come all the way down into this area of interest. First, the Globex low area of interest. But if we do find buyers there, which we are going to bounce, that generally is a support or resistance. In this case, it's support. And then we could just continue to go right back into this trading range and then swing from there. But right now, I'm not interested in any of that. I'm interested in higher prices as market pushes higher. Okay, so in order for bulls to actually get a breakout, which they are already, but to get continuation for that breakout, they have to close this bar as high as possible, come back down, use this as support, and keep going higher. So we could reach there, come back down. Okay, so we have some kind of a channel. Okay, and I use this channel high. Then I would apply the 25%, 50%, and measured move. Okay, so the channel extension breakout would become targets. So that's what I'm looking for right now. But those levels are important levels, so we can also come back down. Is possible. See, I don't like this because when I'm measuring for any kind of measured move, I don't like to take the wicks into consideration. So I want to see a bull bar. This is a 15-minute chart. This bar closes bullish. Say that's closed that way. Then this is where I'm going to measure. Okay, so that's right there. Possible target. Now I want to check something. Okay. I'm going to do this better. That's better. Here we go. Okay. So these are target, target, target. I do need to adjust this because I don't know where the breakout is. Maybe I could take that. I could get us closer to 1-to-1 target, but I don't know yet. It might actually close a body right there. Then I'm going to have to adjust maybe like this. Wherever that body closes, then that could get us to that target right there. So it's all adding up to be just fine for bulls as they continue to go higher. Okay, So this is what I'm seeing at the moment. Yesterday's price action, one of the most lucrative days, in my opinion, we already started the squeeze, and I talked about this already. So you can see cup and small cup, big handle, big pullback, bull flag, in my opinion, and so we go higher with the higher low. Big cup, small cup, even a much larger cup and a smaller cup. So we got a ton of measure move. Again, I don't like this wick, so I cannot measure this way. I don't want to measure it this. I can measure it this way. That would be 1 to 1. That would be 2 to 1. Okay, so but there's a much bigger structure, but I don't like to take it this way. Okay, because that's a wick. So what I'm gonna do is I'm gonna take that possibly, or is I can even take the entire leg and a breakout, and that would be perfect 1 to 1 measured move target right there. Okay, so we got that measured move, but really I was looking for is a way to go long in the morning. Before the market opened, I posted 2 charts from March 16 and a February 13 or 16, I'm not sure. You had 2 similar days, and I said we're gonna be staying gap. We're gonna be gapping to the EMA, and we're gonna keep buying, including the first touch of the EMA. We might do 2 things: is we can either close at the EMA, or we can close above the EMA. Now, closing above the EMA is generally a rare one. I expect some kind of a pullback to EMA. Okay, so at the end of the day, we actually broke below it. Now, I'm going to show you guys a quick trick. Okay, so every time, doesn't matter which time frame you are on, here's how I use EMA. If the market, and here's how I look for traps and buy. If the market is coming down, okay, so coming down, suddenly it's making wicks, right? So here is the EMA. And suddenly we're going up. Everybody wants to buy it. Big mistake, right? So everybody wants to buy it. But the good traders, experienced traders, they do not buy high like this. They do not. They wait a pullback all the way to those wicks, and then they look for buy signal while everybody is selling. So there are trap traders here. Paying trades. Then they buy. They trap. Okay, so that's one. For the other way around, so if you want to buy again, market is going up and up and up and up, right? So suddenly it comes down, making these wicks. EMA is coming like this, right? So suddenly it goes up, right? You're not going to buy here. You're going to wait for market to pull back to these wicks, and then you're going to trap the sellers and you're going to buy. Wicks, trap the sellers and buy. So let's take a look here. Look, wicks, pull back, buy. Wicks goes up, everybody's buying here, but look at that pullback. This scares everyone. Then they start to sell, and then it just goes right back up. Look at the wick. It pulls back, traps, and buys. Okay, so let's see. I'm looking for gaps. This doesn't work. This, I'm not interested. And if you want to sell, you could still use, there are some wicks here, but I don't like to use. I like to look for some kind of a defined gap. Okay, so like here, for example, there are wicks right here, right? So the market comes down, tests those wicks, and then goes up. Look, let's see. Here, wicks, bunch of wicks, in fact, barbed wire. Comes back, everybody's selling, but nope, you got a beautiful signal bar, continuation, buy. Okay, so even here, you can even buy that. Look, wicks, we're probably going to come down and test them before going higher. So and so, okay? So let me fix that. All right, yesterday, so I'm looking for this right here in a beautiful bar, 6 and 7. I mean, selling here, you just have to squeeze your chart to see. If you're just not looking at what's to the left, you're leaving too much information hidden, and that's never good. You have to look at what's happening prior day, what has happened, and the day before, right? So we have a trading range here. So if you're selling this low, risk reward, it's not that good. If you're selling underneath that bar 1, this is your risk and this is your reward. Really? Would you want that? When the bulls are actually looking for other way around, they're looking to buy. They see these wicks, they want to buy that pullback. So I look for a good wedge setup, okay, and then buy opportunities. So you have 1, 2, 3, right? So 1, 2, and 3. 1, 2, and 3, right? So you have 3 and a higher low, or 1, 2, 3 higher low, right? So I want to buy it. This is your signal that buying here is no good because sellers were present here, right? So the last bull bar before the sellers showed up with the leg 1, leg 2, leg 3, that very very last bull bar, 75, you mark underneath that, first sellers are waiting there. So if you're trying to buy here, you're going to be blocked. So buy the pullback because it's a trading range, right? So buy the pullback. That's a wick right there. So, and before that, bad buy signal bar. If we get to that, that's because we're trying to reach that wick. That's where the buyers are. Now, what you need to do is, if you want to see swing bulls coming in, is from that wick to the next bull bar. If there's any gap there, mark it. If the bears are not able to close that gap by overlapping with the last bear bar before the bull breakout, if they fail to overlap, that means swing will begin. Okay, so then you can buy above that bull bar. Or buy the second is the pullback to EMA and buy and buy and buy. So you're in a swing here. And then what you do is you start measuring measured move targets. If you see good, strong bull breakouts, that's your measured move right there. That's your 2-to-1 right there. Okay, so, or you can measure the leg. Here is the leg. I like to measure the bull leg because bull leg started here, ended there. So anything bar 10 high, it's not my concern. So that's what I'm looking for. That's my measured move, and that's my 2-to-1, and a perfect 2-to-1 with bar 47 hitting it. Now there's another leg here. I can measure that. Here I can take the whole thing. That would be my measured move right there. However, it's a wick, so you can maybe take that, get rid of that wick, or you could take it. It doesn't matter. They already reach anyway, so it doesn't matter. It's just a leg right there. But I think this is leg 1, maybe leg 2. You can even measure this entire leg 1, leg 2, and that will be your measured move target. But we never met that measured move target. So if you're adding more to a leg, you may get false targets. So just measure that one. That's a pullback, and then a strong bull bar, buy above 21. And then you're gonna keep buying. So that's what I did. I kept adding. This happened. What I'm seeing here is basically, okay, so a bunch of wicks here. We're probably gonna test these wicks before going back up again. So I've got a gap, I've got a wick, right? Wicks right here. Here's the first test. Here's the second test. One thing the bears failed to do there, which I talked about, double top neckline. If we cannot take out a neckline with a bear body, do not expect lower prices. 48 it's a perfect double bottom, but it didn't even go one tick below 40. Okay, so that means bulls are still maintaining, they're still defending this area. Although no one would put their stop underneath 40 because there is no solid breakout from the bar 35 high. Those stops are probably down here, maybe down here, but maybe down under 34, but never under 40. So the market tried to come in and probe that area, but I don't see any bear bar. I don't even see a one tick failure. One tick breach. So basically, this is a bull flag, a form of a bull flag. We're testing these wicks, so buyers will show up above the next bull bar closing on its side. So you can buy immediately above bar 51 and go long. Expect plus I said sometime around 130, bar 48 and 50, I said look for another swing that will last about 12 bars. Okay, so I've been marking these. If you go under the ES analysis read only, for weeks on the weekends, I marked week worth of charts and marked that midday swing, and you can actually see right there. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. That's the 1 hour. Then I look for 16 to 18 total in bars, right? So where was that? So it's 12, 13, 14, 15, 16, 17, 18, right? So that's right there is hour and a half, right? Am I wrong? Yeah, that's about 20 bars before it started to come down. So it's a little bit over hour and a half. But you can also, if you count from 48, that's 2 hours straight. You get just about 24 bars, okay? So 2 hours of swing right there, which is good. And that's what you want, okay? So, and a day like this, you get about 1, 2, 3 bars testing the EMA, and you get a nice bar. Expect these to be broken. And if you're the first time you're entering and you didn't trade any of this, you can still trade this as a trading range breakout. Look for a measured move target right there, which is right there. You can bank that. If you buy above 52, if you bought above 52, or you waited a pullback, breakout with 53, pullback, and then you bought it. So maybe you bought there, and that's about 5, 6 points, 6 solid points of very late entry, but it'll give you. And here's a wedge bull flag is another one right there. Is you buy above it, or that's a doji inside bar. You're not so sure about it. You're looking for a continuation, then buy that. That should give you about 5 points. Okay, so let's say took that. That's just about 5 points, right? So you exit out with the close. That's 5 points. Okay, so or you're exited out right there. That gives you 4 points. Either or, you're gonna make money even if you enter at the end of the trend. Now, what happened here? Well, we talked about market reaching a certain high. I wanted to see market to continue higher, but now we made a double top, and I found you guys a bunch of bear targets, right? You got let's say up, down, and up. You got 3 wedges here. 1, maybe pull back, 2, pull back, and 3. So from here to here, if we're breaking that, I said we're going to come down and test that, and we did, right? So the market tested that. The market even tried to test the 26 high, but we have a breakout and a gap there, and they couldn't continue. That was my next target for continuation, and I expected maybe bears trying to sell the bar 75 high, but it didn't. It's end of day. I went flat anyway because I don't like trading the bar 77, 78. Now, is anybody who sold here with 75, okay, so maybe they sold, they got trapped, and machines know that their other machines are stuck maybe, so they're going to sell right there, okay, so maybe a couple of points above, and then they're going to get to their original sell price and a couple of ticks below, and they're going to exit out before it looks for a second leg up. So anybody I said trapped here, selling, or maybe you sold above 74, you got a chance to break even with 77. But then it closed on its midpoint, right? So, and even this one actually tried to come down a little bit, but at this point you're looking for a second leg up. So if the market was forgiving, or anyone stuck here will buy down here, okay, so they're going to look for some kind of break even, and that was bulls break even right there. So the bulls got a good exit as well. Okay, so it was all in all, it was a good day. Sometimes this day is what it does is it doesn't get that pullback. So, or it does this, you don't get a pullback all the way to bar 58. Okay, so you maintain this gap all the way to here, then you get this pullback, and then you go up, and the market comes down to the EMA, somewhere around the EMA, and it closes right there. Or at the end of the day, it does a little touch, and then bounces and closes above the EMA. So sometimes you get that rather than this, you end up getting this really long gap to the EMA. Is you get one gap, one touch, and then another gap, maybe 20 more bars. I don't know. You don't get this, obviously. And then at the end of the day, you get a bounce, touch, and then close above. Sometimes all you do is go up and up and up. It never touches the EMA until the end of the day. One touch, and then bounces again. That's a very rare day. Super rare. Happens like maybe once a year. I've seen it once or twice. But this day is started to make a wedge top right here. So there was also another wedge top. So you have up, pull back, up, pull back, up. Okay, so you have a target like that. So that one. This one actually is extended into that. So this was my really target. I took their profit regardless. I didn't really care for any of this. Okay. I waited if they were going to sell a little bit more, maybe into the moving average. Once I saw 76, they're going to sell up here, but only to break even. And then I said, this is going to get a second leg now. So bears kind of let it go right there. Being the end of the day, no one's going to hold. Okay, so this ended up being a quick pullback, and the market kept going. It's higher after that. You can see it's leg one. That's basically the leg two right there. Touches the EMA, makes a double bottom, kind of a bull flag, and it keeps going higher and takes out that high. You have a measured move to the upside, and you are in a spike pullback channel. Now, because this is a spike pullback channel, so this area now becomes a magnet. So I marked it as support. Eventually, if we have a triple top here, we might go up a little bit. But if we start to come down, you got maybe a double top neckline. First, bears are going to want to swing, take out this, and then we're probably going to pull back. We could pull back right here. I'm going to look for a double bottom and a swing high again. Because anytime you have, this is a bull flag, you have the spike, pull back, and then the channel forms. We come down right there. Okay, so we make a double bottom, and I'm going to look for retest or right here. If they want to sell, this is where I want to look for sellers. Okay, so right now we're going higher. We're breaking out from the channel. Okay, so this is what I want to see. Test it. See if we can do that. Is Gulabex high? All right, market is open. Let's see what the bulls are going to do here. We gapped up on the hourly. It's trying to reach here. Okay, I messed that up. Let me take a look one more time. Yeah, so even on the daily, we are above the expanding triangle. We are testing this important area. We might come back to it and keep going higher. I'm looking for Globex first channel extension line to be tested, which is right there. See if the bulls can do that. And I have another target right here, which happens to be the second extension. Big gap up, and the market is trying to reach somewhere. I don't have enough information on the 5-minute chart, so I don't really care. But it is a big gap up. It's trying to reach somewhere. So up, down, here's what I'm going to do. It's trying to reach a measured move target, which is right here, 60.50. Okay, we're about to reach that measured move target. So we might come back a little bit, come down a little bit. We reached that target. Are they going to keep pushing this? Well, they have a target up here. 2 of them, actually. Okay, actually, I'm sorry, 3 of them. Hourly targets, the measured move target, and then the second extension. But since we reached this target, there will be some profit taken. They can still continue to go up, but I would assume a little bit of pullback here. Today I'm sharing and co-hosting with Brad Wolf. He will be live streaming in the afternoon, so don't sign off around noon. Keep your stream open, as he will come in and take over and close the week. Am I? Let's see. I could be. 64.75 is 67. Yep, I am slightly behind. Let me fix that. Thank you. I'm not in a trade, so not concerned, but I'm glad you're caught that. Hang on a minute. Major volatility. We opened up with 10 points, so no wonder I'm behind. So just give me a second. Bar 1 is still pushing. It's at 65. So we reached my targets. Okay, so we reached even though this is behind, but we reached my targets. So that pullback didn't come back, but it will come back. I mean, we're going to come back down a little bit. I'm just waiting to see when that's going to start. Hold on now. Let me reestablish the connection, and it should catch up. All right, 65.50 is we are at my targets, I should say. I'm looking for some kind of a pullback. These bulls need to take profit. Just waiting for my data connection. Second bar gapped up at the open. Bar 2, they're still pushing. Now it's too high in my opinion. I don't know the bulls want to buy this high. I think they would look for some kind of a pullback, even though the bar 2 open. Now trend from open needs at least 1 bar strongly closing on its high, but 2 bars, 2 bull bars, the bulls would look for it. But even if they get the 2 bar, I'm afraid this is way too high. And when the average price is down here, I don't know how many bulls will want to buy there. So they might look for a pullback, and the bar 2 could pull back. If the bar 2 closes bearish as a sell signal bar, there might be some sellers underneath that bar. So look how it closes. Right now it's forming some kind of an upper wick, but it is still a bull bar. So it's a breakout, but we will pull back. Okay, they're trying to reach the measured move of this channel, measured move target of this channel on the Globex chart where I marked pre-market. Yeah, I'm behind. I'm waiting for it. I'm reading I already see there are 2 bars. I'm reading from different Thinkorswim charts. I'm waiting for connection to be established, and it is right now. I think it's back to normal. Let's see. 68.50, 67, 68. Yeah. So I'm back. Two to one targets, and price is trying to reach the measured move target from this channel breakout, and also the daily bull target is up there. So I guess the bulls want to keep pushing this, but to me this is way too high. I prefer to buy a pullback, but if you are still long, you may want to pay yourself as we reach the half, 1.5, right around here. And if we fail to close above that, is right here. If we fail to close above this line right here, we could end up coming down very quickly. So it's better to pay yourself here. It's trying to reach the 50% mark of the 1.5. It's trying to reach here. And furthermore, the 42.77. And then on the hourly, weekly, this is the weekly chart. This is the breakout from the last week's high is trying to reach that trend line. And on the daily, it's trying to reach right there, which is my, how did I get that target? One might ask, I have an inside, outside, inside, and I see the trap and double bottom, breakout, pull back, trap, breakout again. So we close the bull bar above the measured move of this outside bar right there. I'm going to mark that so you know which one I'm talking about, which is right there. So therefore, we are continuing to go. This is my target. But on the 5-minute, you really want to get paid here, because if we fail to close a bull bar, then we pull back very quickly. Okay, I'm still behind. Now it fell behind. I don't know why it's falling behind. I have no idea, because I only have one connection open. Let me switch that connection again. We have a third bull bar going up. So 70, 50. Okay, so we're right at that 1.5 right here. I'm going to try to establish a different connection. So we reached that 1.5 target with bar 3. Okay, so I don't know if I need a new PC or a new application. We'll see. But we reached that target, that red arrow points with bar 3. Okay, so good for the bulls is if they do close the bar 3 body above that line I marked, which is 70, 50. You can mark your own chart. Then expect more bullishness. Okay, so I'm just waiting for why is this not? Just waiting for chart to update. I thought I passed this, but apparently I have not. So the next is around 42.80, 81 is market. We have trend from the open is gap up, strong bull bars. It's trying to reach the 2-to-1 target with bar 3 and 4 possibly. So if you paid yourself a little bit, you're holding a runner because we have bulls trying to reach the 80, 42, 80, 81 area. I'm going to try something here. I see what's going on here. It completely died. Okay, so I think I know what's going on. I'm going to read it from another chart here is until this one updates itself. Target is 80 or 81 is 50 area, 81 area, 80, 50, 81. Let's see if we can get less than 7 points more and reach the 4280. Less than 7 points more and reach the 4280. There might be some profit taken at 4275, so be careful there as we get closer. Yeah, I have quite a bit of charts here. NQ, RTH, Globex, this and this, and I do have some indicators that might be causing, such as this volume profile I might actually get rid of. Just waiting for, I'm going to get rid of this NQ. NQ is already taking profit. 72 is 72, 73. Okay, bar 3 needs to close above this line in order to get to the one. If it fails, then we pull back. Okay, so it's important that we need to close a bull bar if you want to get that 2-to-1 target. But we came very close to the 42.75, but we didn't necessarily test it. I like to see bulls do better here. Let's see if we have momentum still left in the market. That means bar 4 needs to actually fill that upper wick of bar 3. Bar 3 is not a good sell signal bar, so it's difficult to sell that under one tick underneath bar 3. For I mean, there are probably buyers there, not sellers. So if you sell, they can turn around and fill that upper wick of bar 3. Okay, then you might end up getting stuck there. It's not a good sell signal bar. So, but the reason why are we coming down? Well, we reached the 1.5 risk reward, right? Reward, but we did not close that bar 3 one tick above, which I explained. But really, what's happening on the Globex? We reached a major objective, which is measured move from this channel that I drew, and it's exactly right on the dot. Okay, so I think you're right, Marius. I need that new graphic card, which I'm working on it. So let's see. They're taking profit, and my only problem here is that next bar could suddenly, by the close of that bar, go all the way up here, and then continue to go higher and close bullish. But we'll see. This is a problem right here. So, and I marked it, and I warned you, you really need to take this profit taking is getting stronger now. We're coming back to this extensions again, but all in all, Bull's done a terrific job here. Job well done. I'm no longer interested in this, nor this. These targets met. So if we suddenly get a one big rejection bar, taking out the last 3 bull bars, or the Globex bullish bar here, the bull bar. If we come down and close a bear bar right around here, that'll be a major rejection. Okay, so then market could sell. But am I behind again? Let's see. 65.25, 62.50. Yeah, it's behind and it's not following through. It fell behind again. I don't know why it's doing so. I'm going to try to switch. Let's see if I can actually switch to a better. Hold on. Let's do this like that. So we improved my upload speed. I think it's something to do with the application, nothing to do with the internet, because it's now 1 gig. I don't get this kind of problems. I think the streaming is slowing down. So what I'm going to do is, going forward, I actually talked to team about this. I'm going to separate the streaming. I'm not going to trade on where I'm streaming. So I'm going to get another computers. I'm going to trade on that one, and then I'm going to stream on another platform, which is going to be Ninja, but that should solve the problem. So yeah, I need to set that up soon. 60. So I'm caught up, so it's all good. Okay. Back to normal with the data. Yeah. So I think that the whole idea is to, lighten up the load that this computer, it's a gaming computer, but I don't think it has any life left in it. But once I separate that, I think it'll be fine. I think market is trying to come down, but I want to see how this bar is going to close. If bears take out the bar 4 low, we could easily come down and test it, open of the day, and further fall below, because you have the average price right there, and we might actually make a wedge bottom before maybe even go back and test those highs. Bears are trying to reach 60.75 to 59.75. Really high volatility in the market right now. Came down a little bit from 10, but it's still bars are moving fast. Okay, so bears need a second bear bar here, not a bull bar, because if they get the bull bar, could go right back up again. So they need to close this bar on its low if they want to come down and test the open of the day. We can pull down the 54, 42, 55, 54 area. I just want to see how this bar is going to close. Bears want let's see here. And bears want to test the 60.75 or 59.75. But they need to close this bar on its low. It could go further more down to 55, 54 area. This is the average price. Calculated from the 20 bar range. So it's 5 bars from here, is 15 bars from here. There's still 2-to-1 target here. I want to see how the Globex bar is going to close. I still do think that bulls are going to try to push this higher, but we gapped up too much. We need at least some kind of a double bottom, okay, to form. So there might be some sellers underneath 4. The only problem selling underneath 4 is that the wick is too large. So some bears already sold close instead of selling, but there will be some sell stop orders underneath for. Target is 60.75 to 59.75 for bears. You now have an outside inside bar. Bears want to test the 4 low, and they want to get a breakout, but there are buyers also there. So if you sold the close of 4 is okay. Now the sell stop orders moved underneath bar 5 is you need to still scalp between 60.75 and 59.75 because it could bounce there very quickly. So they activated the sell stop orders underneath 5. Market needs to make a 1 point, okay, so at the minimum to give those guys some kind of a profit, and they have not made any profit yet. So I still am waiting for 60.75 at the minimum tested, but since ATR is over 5, we should test 59.75 at the minimum. We might even test 58.75, which is a 15-point swing scalp. But it is support here. But we need a second leg bear down. Okay, second bear leg down. So anybody sold underneath 5. Disappointed, have not yet made money. They want continuation. We need some kind of a double bottom around 10 o'clock. Okay, so it is just about. Generally, I look for double bottoms and double tops. So I expect market to continue to test the open of the day, maybe even dip below it. Okay, so I just scalped right around 59.70, 59.75. All right, 58.75. That's great. It's accelerating. If they close this bar right here, your next target will be 54.75 to 53.75. Okay, so 54.75 to 53.75. Sell stop orders activated. Bears are making money. Let's see, we can move underneath bar 1. I'm going to move this. Average price is right here. It was too high to buy, but I explained why we couldn't go higher. So you really need to take profit at the 1.5. And here comes the double bottom, but I think we're going to breach that a little bit. So the target is still 54.75 at the minimum. Bears are trying to reach that, and I mean ATR is really healthy, so they might even reach the 53.75. But that we need to bounce and make the we need to bounce and then sell again. All right, here we go. Here comes the target. We just met the 54.75. We left one tick failure to 53.75. We tested 54. Okay, so this is great. I scalped that one as well. This can sell. It could continue to sell. But this is a 20-point move. So since it's a 20-point move, profit taking will be a lot more sweeter, so we're going to pull back a little bit. Next couple of bars could be a pullback bar right here. You do want to pay yourself here. That's a double bottom, but we might get a wedge bottom at the EMA, maybe even underneath the EMA. Okay, so we have that potential. Gap up. Gap up right here. Double bottom. Second leg. Leg 1, leg 2. We actually breached, so we might even get a measured move to the downside. So here's the first pullback, second pullback. We need a third push down. But what if we don't? What if we do a major pullback? We do need to pull back due to 20-point, move. So right there, it's profit taken with bar 7. But I expect continuation is down. So I'm going to allow these bears to pay themselves here a little bit and see if we can actually sell a little bit more. But we have a perfect rejection is on the 15-minute chart, and it's turning out to be a sell signal bar. So on the hourly, because maybe I did not do a good job there. So on the hourly, because maybe I did not do a good job there. Yep, so that could be it. So that means we did touch that trend line after all. I did say that anytime you have expanding triangles and we get above the expanding triangle, always expect a pullback. If bar starts to close beyond or below this, so and then we take out those highs, right? There were sellers here, so market wants to get back up right to that. A ton of sellers there, so they're disappointed. They might even have sold above that high one and disappointed, so they're going to sell higher and they want to get back up here, maybe somewhere here. But if we do not close a bear bar underneath, well, remember, this is a daily chart. We stay above this, we are retesting and start to get more bull bars, or bar going higher, not more bull bars, but the bar going higher and becoming bullish, then market will continue to go higher. That could translate on the 5-minute chart as a double bottom and a gap maintained above the 5-minute EMA and you get this. So you get something like this. So this is what I want. I want to have a wedge at the EMA and then get this. So we will get a small pullback bull trend, a lot steadier, and a measured move target to the upside. So this is what I want to see, but we might get this instead. It's still a bull trend. There's nothing bearish here. So we just breached 20-point, but we did not close beyond the 20-point or 21-point mark is a bear bar. So what you're seeing with bar 7 is actually a profit taken. Now, if the bar 7 decides to close, and I'll tell you right now, around 52.25 area with a bear bar, then there will be more sellers. So this then becomes a pullback, and we could get another leg down. But right now, as is, this is a double bottom on an angle. Major rejection down, so we could end up getting a bear bar here on the 15-minute chart. If that's the case, there might be sellers. But market is still bullish. This could be just a pullback and go higher again. And all we get is a double bottom here. So we're sort of closer to the average price also. We didn't quite meet that average price. So let's see if we get another leg here. So that will be pullback, and a leg 3 is, yeah, it could work. But a really nice bar 7, and it's the second bear leg down, and but we did not touch the EMA. Let's see if there are any sellers above bar 7 due to people selling underneath bar 6 getting stuck. They want to fix. So then if they sell right there, they need to bring the price right to here. No one's selling there yet, so maybe they would sell at the breakout point then this would be their break even. So here's a breakout point right there. Probably some sellers there. Look what's happening on the hourly. I'm sorry, is daily. Is we came down, we gap up, came back down to the breakout point, which is that upper trend line of the expanding triangle. Now, if bulls want to keep going higher, and even the next week start bullish, they're going to have to keep pushing this bar upwards. Okay, so some sellers that show up right there. Okay, so they want come down to the break even, but that's machines will try to utilize that break even. Others will look for a bear bar, and if they get a bear bar, then I will readjust for their break even price. But this is the first break even, and if they don't get it, then we're going to see if there are any sellers with bar 5, then I'll readjust for another break even price, because normally they wait for either a really bad close of a bull bar, poor close, or some kind of a bear bar. But machines will sell here, and they're going to try to get a break even. Now, they might sell a lot more. Okay, so their break even price, so instead of 1-to-1, they sell 1 entry, sell here, and two more contracts right there. Then this is their quick break even, which we tested already. But it's very difficult to do these calculations on the go, so others will always wait for that bear bar first. But that's why this bar is going up and down, up and down. See, they're trying to come down, test that 33%. That's the early exit. If they load up here at the breakout test, and they even other actually machines now got to their break-even price, which is right there. Okay, so that was a good place to sell and fix the problem. No one showed me this when I was learning. I had to watch it and keep measuring and measuring and measuring and learn it myself. Where can I add to my losing position to fix it? How can I exit out of this pickle and really bad situation? And how can I do it with 3 contracts, no more? Okay, so instead of 2 contracts, you can also do 1 contract, and that still gave you that break even. You could exit only, using 2 contracts, but that 33%, you're gonna need 2 contracts to sell, 2 for 1. Okay, so as I practiced that, I learned to get out earlier rather than waiting for a bear bar to close, which could close up here. And who's going to hold on to that? I'm not doing that. So we have a double bottom. Bulls trying to get their small pullback bull trend started, but there are probably sellers here. This is resistance. Okay, so let's see. And if not, the next one will be right there. All right, so the bulls are getting there just about 10 plus, just about 14, 15 point scalp here with bar 9. What do you mean by point threshold? Oh, you mean, no, I still use them, but when ATR is this big, you're gonna get overshoots, but it still works. Those thresholds are what you need to pay attention, right? So you have a 20 point right there. What is the number? How many points that bears need to push and close a bear bar to get to 30 and 40 point swing? Exactly. So if you mark that, so did we close a bear bar there? No. So it's still valid, isn't it? You're kind of getting the idea. Bar 7 is giving you the idea that you're not going to get it So, and plus, now if you measure that, right, so what do you have? Bulls already closed above, they already scalped 5, closed above 6. They're definitely going to get their 10. They might get their 15. There it is. So 15 is right there. So they're trying to reach the 15 average, 14, but right there. So they might actually get a 20 point out of this 19 to 20. But this 15-point swing, it did not get a scalp yet. So it might pull back right here. Okay, so this is still resistance, maybe a double top with 5 high. It has to come down a little bit to give these bulls a little bit of payoff here. Or it's going to keep going up to the 20 point above. So it's up to you to scalp here and hold the runner, or hold everything. Expect 68 to 69 tested. But since this is still resistance, it's overshooting. I expect a little bit of pullback, a little bit at least. And it is pulling. You see that upper wick? That's some machines paying themselves. It could continue to go higher. Obviously, the daily chart has a target. Now look what happened here. Is bears did sell that second 15-minute bar. They did sell it. The problem here is that they trapped the sellers. Okay, they made some money, but they trapped the sellers. But I kept warning you guys, this could be a double bottom and a trend reversal. I'm sorry, a double bottom and reversal and test these highs, because there are buyers stuck up here and bulls are still trying to maintain this gap to EMA. Okay, so when you have this kind of bullishness, any pullback is a buy opportunity at an average price or closer to average price and a retest of the highs. So you have double bottom, you're going to get a double top. If that double top fails, we come back down here. We make a double top neckline, and we could get a trend reversal pretty fast, because bears are going to target this neckline. Okay, so bulls tried once, bulls are trying for the second time to get a breakout, and they might actually fail. Okay, so here comes the 20 point, 19 is 68, 20 is 42.69. They're trying to get the 42.69 test. But if they fail to close above it, we might actually come down from there and form a trading range. So buyers are trying to get to the top of the trading range and test there. We have not tested. These bulls did not get a 20 point just yet, but this is a profit taken right here. Okay, so we're now breaking this resistance. It became support. They're still trying to get to the 20, which is 69 right there. So they should test that. Okay, so let's see if they can make it. We tested inside a 20-point zone. It starts at 68, I said. We tested the 68. We went one tick above. So either you could have taken profit there, or you could hold until 69. I took profits right around 68, where I said, which is 19 point. But it's probably going to try to get up there to 69. It's trading range. You can see it on the 15-minute chart. They're buying low, they're scalping in the middle, and then they're having a runner all the way to the upside. Machines are selling this bar because they see this as a leg in a trading range. So limit order, so they're selling it. But if there are no more sellers, suddenly at the end of this bar closing, this kind of closes upwards, we can get more buyers. But if it closes down here, then bears want to come down. Check out these lows. There are probably buyers here waiting, because they already bought one tick above bar 9 while we were taking profit. So those guys are stuck there. They're looking for maybe right around here, right in this area. They want to buy, and as it goes up, they get a break even before it comes down. That could still give us that wedge that I've been talking about. but market is not bearish. It's still bullish. It's just a trading range. Might be looking to break out of this trading range and go higher. So we could get a day like yesterday, okay? But we have to take out that bar 3 high. So I'm going to trade this as a trading range now on. I'm looking for buyers. They're already showing up at the breakout test area, 1. But there's more here, so that makes this area support. Bulls need to, so what time is this now? Okay, so in 10 minutes, if bulls actually close above 67.75, okay, then we get more bulls. 67.75, I'm going to mark that. If we start to close this, bull bar, meaning this hour closes is around 10:30, a bull bar above 67.75, we could get continuation all the way to 75, and furthermore 83, 84, 42, 84 area. But we need that bull close. If they fail, then we will come down possibly to, let me see, 80, 58, 50, 53.75, maybe even down to 49.25. Okay, so bulls need to close above 67.75 in less than 10 minutes, 9 minutes, if they want to go higher. But I did say that this area is resistance, and we need to see if there are any buyers down here underneath bar 9, around 8. And if I do not see the bull bar is closing, any bull bar, 67.75, we're going to come down. We're going to make a wedge bottom. Okay, so no. It's kind of dangerous here because it's still support here. Okay, so there's a breakout, failed continuation within the trading range. So upset bulls, they will buy closer to the open of bar 9 or underneath bar 9. Okay, so they're looking for buyers. Bulls got less than 7 minutes to close above 67.75. If they fail, we will come down. Possibly 53.50, 51.50. Okay, so even test of 47.50. So maybe even underneath this line. Might even like this. It would be like that. Or like this. We would end up coming in this area. Trading range is with some void areas. So there is still potential to get stop order bears. Trying to sell underneath bar 10. I don't like to sell into these limit order bull areas. There are buyers waiting there. Whoa, what just happened there? Okay, so my application quits itself. Just give me a second to relaunch. I thought the Friday was going to be easy. I might ask Brad to give me a maybe additional half hour to cover the lost time. Whoa, what just happened there? Okay, so my application quits itself. Just give me a second to relaunch. I thought the Friday was going to be easy. I might ask Brad to give me a maybe additional half hour to cover the lost time. All right, so I'm watching. Bar 11 closed pretty bearish, so stop order bears underneath. 10 is making money. They're testing just about the open of bar 9, like I said that they would. They're probably buyers underneath there. Okay, there's still time. Is about 4 minutes left for bulls to make a run for that level that I mark. I think it was what, 67.75 I said. If we close above that, then we might actually still go higher. Let me establish my data connection. I love that GIF. It makes me laugh. It just quit. I didn't do anything. All right, just waiting for data to be established on the chart. Bulls need to start closing a bull bar here if they want to just go higher. Bears want to take out the midpoint of bar 7 or the neckline bar 7, and they want to bring market a lot more downwards for that wedge bottom. So it's a triangle at the moment. Triangles can break out 50% to upside, 50% to downside, only to reverse back. Market is bullish. We're buying the pullbacks, okay? So bulls are going to get above that, I think. Let me see. Before this hour closes, they're going to try to get above 67.75. I'll put that back on right there. So I want to see bulls try to start closing above 67.75. Then we will go test the 3 high. We might get a breakout from there. It's triangle. I'm going to get rid of this. You kind of average price now. EMA actually gone above the average price, so EMA is your average price, so you no longer need that. Okay, so here we go. We might come back down one more time before going back up. Okay, so bulls want to test the 10 high first, but if we start to close 67, you see how they're gunning upwards? Is right before the 10:30. We reach 10:30. First hour ends. So that right there is what I was talking about. If we get that bull bar above 67.75, we're going to get bulls buying that close. Okay, even though it's a trading range, you can see that they fail to sell. So the moment we close, we get more bull bars. But still sellers up here, since this is now a trading range. Triangles are trading ranges, expanding or contracting doesn't matter. So they're probably sellers up here, but they're trying to get to the 10 high. They're trying to get a high 2, high 1. So they're trying to get a high 2 here. The moment we take out the 11 high, the only problem with 11 high, I would not buy above 11 high, but there is a ton of gaps here, these little air pockets. And Al talked about them. I call them void. So these air pockets are basically sets the conditions for stop order market. Okay, so that means there probably is buyers stuck above bar 9. They bought down here. They got to break even. They want market to go and test one tick above bar 9 high. So they would make money with their original entry. So that's what that fight is about. All right. So bar 12 did not close where I wanted to close. This is bull's chance to start closing above 67.75, but on the ETH chart, the ETH bar is still bullish. Hourly bar has not really closed above 67.75, and it might. But at this point, we have 3 touches. We don't have 3 touches. Since we failed to close above 67.75 before the first hour end, there's a potential of coming back down and testing this lower trend line now. But that bar 12, even though it's not triggered high 2, and anybody who bought above here stuck because it's a small trading range. It's difficult to buy, but it is still high 2. This bar closed higher. So the bulls want continuation. They want 67.75. They want bar 10 high tested. But I don't like the fact that this hour on the RTH RTH bar didn't close that above 67.75. So I'm going to wait for another bull bar here before I even consider buying or buying. But bulls are in kind of charge here because market is bullish, always in long. They want to test this area. Can we get a double top here with bar 3? If we get that double top, then we could set up around up here maybe a major trend reversal. But it's a triangle right now. We need the third touch on this lower trend line. And I kind of warned you there that bears might try to get it. And this is why I didn't want to put a buy order above 12, because they kind of signaled me already that they fell short there with that 67.75 close I wanted to see. So I now have to allow bears to get that third touch. But I think the bulls are trying to get to 42.85, 86 area. So I'm going to mark the 85. This is where the bulls are trying to reach. High 2 triggered, but in a small trading range. So limit order machines see this bar 12 as, yeah, let's trap the bulls and let's scalp. So they're scalping. If there are no more sellers there, and we start to break above this trend line, we could go higher. But if there are sellers there, we could also come down to the 12 low. So it's better to wait for a solid breakout and some kind of a direction. You're in a scalping environment right now. Yeah, bar 4 is mother bar. Thank you, Richard. So you can also measure that and see what is actually going on and try to make sense of it, right? So if you cannot make sense of something, then use what seems to be a range that the market, the bulls and the bears are using. So you can see I don't have a mother bar here is all the way to 4 after 4. So 4, we have a breakout, failed follow through. We go back to the outside inside, right? So, and a breakout. So there's a trading range. We go test the middle of that trading range. And the bears try to sell again because that's their first try, that's their second try. And they failed again. But bulls need to close above 66.50, okay, right there, to go and test this upper range of bar 4. So that's what they're trying to do. So that's targets and that's target. So this is where bulls want to test. They want to test that. They want to test that. but they need to close that bull bar one tick above 66.50. If they do that, they will get to 68.25. Furthermore, 69.25. But we need that bull body. If they fail, bears can sell again. But if we get a breakout here, now can the breakout fail? Yes, it can fail. How could it fail? It could test right here and then come back down, or it's going to go and test the 69.50 and could come back down. Okay, so let's see. 68.25 is, see if we can get a touch there. But the moment we get a bull bar close here, we could also go and reach the 69.50, or furthermore 70.25. So I'm looking for bulls to actually get us to 70.25. What time is it now? It's, okay, 10:37. Bulls are trying to reach 73.75 and go beyond it. I don't know if they're going to be able to do so. They might. My next target, which is my daily target, is 42.77. Okay, so I had it pre-market. So the bulls might be trying to reach there. I get rid of this. All right, 68.25. I'm looking for a test. We might come down a little bit, but I'm looking for continuation also. So what you can do is you can scalp here, hold a runner is all the way to 70.25 area. But it's resistance. First breakout could fail. We could come right back in. We did not have a third touch on this, so it could collapse. Bears want double top with bar 10, and they want to collapse right back down. So you could scalp there for one, and then hold a runner into 70.25, 70 to 70.25. I think sellers are present there. Okay. Okay, so why did we test there and suddenly came down? It is the trap zone. Sellers start to show up there, but sellers don't have to. I mean, bulls can still push the sellers also are waiting there between that and that level. They're trying to prevent a breakout above the bar 4 high. Okay, so that's the whole idea of that trap zone. They're trying to trap the bulls. Market's trying to reach a 73.75 or 74 area, but we're going to get challenged. Bulls are going to get challenged at the high of this trading range. But we have a breakout, triangle breakout here. Now, what does this mean? Maybe this was the triangle lower trend line. So this means it's trying to get continuation into my daily bull target on the Globex chart, 42.77. So if you are long here, you reach the 15-point scalping swing zone. We're going to come down a little bit because it's top of the trading range, opening range. Okay, so you're going to get challenged here no matter what. Bulls are trying to tag this, but before we get there, you see how? Let me get this out of the way so you can see what I mean. If you have a hard time, look at that. I did say we're going to get challenged. There are sellers still waiting there. Bulls know that, so they start taking maybe profit right there. Okay, but since ATR is really strong, this is where bulls are trying to tag. Okay, so I generally, if I'm long, I bought maybe a high 2. This area is a trap zone. I will always scalp here. I might leave a runner to go to here, here, and there, but I will always in this area, from this area to that area, from that area to that. Okay, so this area is a trap zone, and there's a challenge there waiting, and it could collapse. It could collapse, come back down. You want to pay yourself, right? This is also the 15-point swing scalp. Bulls trying to get to their 19-point is to 20 points scalp, which is 76.25 to 77.25. So we're going to try to reach right here. If we go and reach there and close a bull bar, this is where market is going to want to go. But this is their first target. It's top of the trend line. We have now double top here, and it is around almost 11 o'clock. But at this point, I think bulls are trying to get to my daily target, 42.77. I would pay myself now that we're breaking the trap zone. Pay yourself here if you didn't scalp. You got to pay yourself here. We may not continue. Give yourself a profit there. If we get a bull bar closing above it, then expect continuation into 42.77 to 42.78. Furthermore, bulls want to test the 42.85 to 86 area. So this is a swing now. Okay, it's always in long, obviously. So I expected that double bottom and move up. So could this be a small pullback bull trend? There's nothing small about it. These bars are actually pretty big. But this is nevertheless is a trading range. And bulls know that. So this area, taking profit here is kind of important. It could collapse back down. All right, here we go. There is still 3 minutes. Oh, it's accelerating now. I guess they really want to get to that 77. All right. They did not take profit here, so it's kind of due to take profit. It's going to pull back. It now reached the 19 to 20 point swing zone. So it's going to take profit. It didn't really tag the 20, which is 77.25 for bulls, but is reaching a level, not taking profit, and then reaching a 20-point swing. It's going to pull back. I don't care how bullish it is, it will pull back. So I'm going to pay myself here. These are just reference to how far it can go and reverse. Okay, you don't have to use them. Okay, so we're already on a second entry long here. We're swinging. But generally speaking, okay, so you're going to get these profit taking. Whether you use this or get rid of it, just market, right? So market came down, made enough counter trend move to start the count, right? So where are we? We're at the 1950. 20 point is right there. We just reached the 20 point. I'm out. We want one tick above it. I paid myself here because it has the potential of pulling back. If the bulls close above this level after they're taking profit, you see that upper wick. If they close above this level, I'm going to buy and hold it until 85, 86 area. But that's profit taking right there. This is why I scalped. Let's see if there are any pullback buyers here. Right around the above 15, low of 16. Okay, so get rid of that. So I'm looking for pullback buyers here. Is around 42.74. Looking for 5-point scalp, but I want to wait for this bar to close. Unfortunately, anybody sold here is stuck. They will want to sell. Let's see, if you're stuck here, you might sell. That's about 10 points. Okay, so right there. 10 point above, they might have started to sell, which they did. So they want market to come down somewhere closer to the 10 point, bar 10 high. So if you are bears, you sold maybe around that 10 point, somewhere there. I'm just going to take the close of 16 since that's where the sellers were. It showed up. So their midpoint is right here, which they have not reached yet. That's their break even. But market wants to come down and test the 10, except there is a gap now. It's a breakout. Bar 16 is a breakout bar. Pullback, it's trying to go higher. See, I rather to buy, not sell. So we did buy the pullback above 15. Bulls are trying to get a 5 point here, or 5.5 points. So count from 74, add 5, that makes it 79. 79, 79, 50, I think market is trying to reach. Let's see if they can actually get above 42.78 with a bull body. Pullback buyers bought above 15. Like I said, I wouldn't sell this. There's no bear bar closing. So anybody who sold a close of 16, which is never a good idea, did not get. They got very close to the break even, but failed. So I think we're going to test. Let me see. 6 point. We're going to go 78.50 to 79.50 area probably. So I'm going to try to scalp that. Might be even 80, 42.80 is if the bulls can do better here. But if the spark closes bearish, it is still a breakout, possible measured move. I can take that. I'll just take this one. It's trying to go up here. Okay, so I want to see bulls get us to the 42.80. If the ATR stays 6 point, then we can actually touch the 42.80 and then continue 2 times the ATR. That could get us up here perhaps. But we reached my daily bull target, so I don't know what the bulls are going to do here. We have a little bit more space to the upside. So I want to see 80 tested. And I want to scalp just a tick below. I bought the 42.74. ATR is 6, so I'm adding 6 point to that. And looking for 42.80. But I'm going to take profit a couple of ticks under. I'm just trying to do a quick scalp here if it gives me any. So I bought here. Ended up entering a little bit late. No, I think I entered right there. Yeah, so I entered here. So up, ATR came down significantly. Yeah, I'm not very happy with this one. I don't know if we're going to go higher. I really don't know anymore. This ATR coming down like this is now a little bit iffy. So you can then, I entered here, say 74, 78, 78.50, 78.75 is where, according to my math, we might test. Okay, so I don't know about the 42.80 anymore, but that's where they're trying to test now. So I would pay myself if I were you right here and see what happens, because there's a wedge here, up, down, and it's trying to get the third leg up. Okay, so it's trying to reach. Okay, ATR is higher now, so 73, just about. I'm not going to move that. But bear's trying to get a double top with bar 16 high because they're stuck up here. So They might be still selling around 10-point area. 10-point is around here, so you understand why I think taking profit there is important rather than holding it to the 80, because these bears will sell. They try to sell, failed, so they're going to sell again somewhere here, which my math is adding up. Okay, so I think that's where I'm going to pay myself. And I don't care if it goes up, because there's a higher potential this one's coming down. It probably is going to breach because ATR is now higher, and my math is actually giving me less, but regardless. 5 plus 73, 70, so that's 78.50 or 78.75. Yeah. It should reach 78.75, one tick above. And that's 1 time the ATR. Can it actually break out and get 2 times the ATR? It might, but it's kind of dangerous because of this up, down, up, down. It's trying to go up, might suddenly come back down. So I'm going to scalp there. There's a measured move. It might continue another 5 points, but I want to pay myself because this is still a 20-point, and we did not close a bull bar above 79. So that presents a problem for bulls. But if we start to close above 42.79, a bull bar, then we're going to go higher. I'm going to pay myself. I'm just waiting for this to reach here. It should go 1 tick above 78.50 before any bears start to show up. I'm a scalper at heart, and I maintain a bunch of accounts that somebody else's money. So I have to scalp and pay myself and reduce the risk. Okay, so that's why I do this crazy math, and I got to make sure I'm getting what I need from the market, and the rest is bonus. That's great. If it goes higher, that's what the runner is for. But we have extended so much, and there are stuck bears here. So they can sell, and I don't want to be stuck in that. So you can see it's kind of bummer. It needs to go 1 tick above. ATR is still ideal to give me that 1 tick above test, 78.75. So I still haven't been filled yet. Still waiting. That's it. I'm filled. I took profit. Thank you very much. Now, if it goes higher, my runner is running. That's great. But I took most of my contracts because this can come back down right here, guys. It can come back down from here to here very quickly, and I don't want to be in that. Now, I'm only holding a runner because I do have a measured move target. Okay, so I have so many accounts. I have my personal accounts. I have accounts with a bunch of companies. So I maintain them. Some days I trade some accounts. Other days I trade other accounts. But every day I trade my cash accounts. That I have obligation to myself. So, but I don't overtrade the other people's money. There's no such thing other people's money, but it kind of is their money. So I have to be extra careful and responsible. But this is a swing, and you already knew that. We did not get a follow through. This is a failed breakout right here. Okay, so buyers started to show up there, but wicks, right? So we come back and test those wicks, and then we go high. So this is the measured move. This is the target. Probably sellers here. So my runner is runner. I'm very happy. What's happening here is that you're getting 2 times the ATR. So that's 10 extra tick. So 10.50. So you're getting 10.50 here. It's trying to reach the 10.50. Oh, now it's more. That's 11 now. That's 11. All right, so that's 2 times the ATR. That's now 575. It's a lot more than 11. See, math added up pretty fine. So I'm making money, but I'm about to take profit here, and I don't care about this measured movement. I'm done. So you see how it added up to be 2 times the ATR because we're still in the swing. I took most of my profits there, and then my runner got the 2 times the ATR into my target. Yay. Excellent. Okay, so that was that. I'm not interested anymore. There's more room to the upside. Bulls are trying to get up to here. And on the daily, we reached my target. All set. So I paid myself. So they can still push this into 30 point right there. There's still room for bulls. Slightly above the measured move. A measured move can be also this. So it adds up with the 30 point. So there's a little bit more room to the upside for bulls, but I'm out. I'm going to look for a pullback to buy because it could be an exhaustion bar. It's pretty big. It's the biggest bar since bar 9. Okay, it's almost as big as bar 9. But the breakout happened here. So you got a leg here. It's the biggest bar within the leg. It might still go a little bit higher, but it's a 30 point. It needs to come down a little bit before we head on to the 40 point full trend target. Head on to the 40 point full trend target. A little bit more room to the upside, both on the hourly chart and on the RTH 5-minute chart. But if you take the leg, the actual leg itself, you still haven't reached that measured move. So it's going to probably continue. There's a gap here, so I'm using what I see as bars. I don't know, you can take this as bullish, this gap, and you can also use that. So if this is your breakout, then well, I ran out of space there, hold on. Can market go higher? Yeah, I mean, market can go higher, but at this point, I have to pay myself because 10 plus 20, you already got a half trend and you got continuation just about 10 points. Okay, so in order to continue to go higher, it needs to pull back. It needs to take profit. I always had the 42.85 as target here. It might go up a little bit more, but it has to come down. You're getting a big bar here, possible exhaustion. I like to see pull back and see if I can buy that. So I'm paying myself. I'm not looking for more targets unless we pull back and take out that bar 19 high, then I'll be interested. But my job is to pay myself here. Okay, I'm going to take a quick break and I'll be right back. Okay. Hopefully I won't miss that pullback. I might, but I make enough money here that I don't need to trade rest of the day, but I do want to trade. This is a beautiful bull trend. We're probably going to look to buy the pullback. I'm not looking for it unless we get a huge bear bar, 2-bar reversal. We might come back to bar 10 area, bar 4, bar 10, because there are sellers stuck there. Okay, so they're trying to get they're trying to exit out of the market, and they are having such pain here. Now I would look at the higher time frame to see if there's any sell signal bar to bring us back down to this bear candles high, or right here the breakout test area, which is 73.25. But we still have room to the upside, so I don't want to is sell unless we have a major 2-bar reversal setup, or there's probably at this breakout point buyers waiting. I'd like to buy. So if the next bar ends up being a bull bar like this, we're going to keep buying and going higher. But if the next bar after this bar closes, bar 20 closes, and bar 21 opens up and becomes a bear bar, then we might end up coming all the way down to this area and then go back up. So I'm going to try to take a quick break and just be back quickly, and hopefully I won't miss anything. All right, looks like bulls are still trying to break above that 85, but I don't know how far they're going to be able to go. If we do get a breakout here, next target would be possibly there, here. Get rid of this one. Or furthermore, 3,300, but if we get to 3,300, I think that 3309 is a much better. So I'm going to move that. 3309. So that would give us additional 10 point-ish, maybe more. Trading range breakout is right there, 40-point target. So we just need bulls to close above 20 and bar 19 high. And if we get that, then we get continuation. So that would be 4297, I guess. Yeah, it's 4297 area. 7, I guess. Yeah, it's 4297 area. It's quite high though, so let's see if we can get that bull body closing is above the 19 high. Probably sellers above is 19 due to being an outside bar inside followed by inside bar 20. Bears are gonna try to trap the bulls, but that's the first attempt of trying to trap them. As long as we stay above mid-range of bar 19 with bull bars, we could still break out and test it 4288, and then 4291, and furthermore 4294, and then the 40-point target above. No break above the 19 high, but it's still bullish pressure. The only problem here is the bar 20. Bar 20 is basically creating some kind of a trading range here. Okay, so we might come down and test the low, but we made a new high with 23. So the next bull bar we get, bulls are going to want to get back up to 4288, 4291 area. But this just put us in a trading range now. Okay, so bears see a double top neckline 20 is they want to break the neckline 20 low or test the 20 low and move down. But where are the bear bars? So I don't have a bear bar. I don't want to sell. It's kind of a bull flag, but they just need to take out that high with a bull body. So we need to close above 86.25 with a bull body to test the 42.88. We might actually end up testing 87.25 and come down, but I doubt it. I think they're trying to get to the 88 or 88.25. You can see these are all momentum bars. So bulls trying to get the 87.25 to 88 tested. They did test the 87.25. That bar 24 literally did that. Yep. So it tested, but it's probably going to push a little bit higher because it's a breakout. There's a breakout. We just need a bull body. So I want to see 88 tested, possibly 88.25. Can market go all the way high to 97, 96? Yes, and we're so close, but it's kind of too high also. I mean, we haven't done a pullback. This bar 20 is the problem now. So they would be sellers 2.5 point above 20, okay, wanting to sell again. So I like to see the 88 tested at the minimum. Oh, that's terrible. But bulls are still strong here. Bunch of upper wicks though, 23, 22, 21, 22, 23, 24. But look at the way the bars are closing. Okay, so upper wicks are no upper wicks. It's the bars. The way that they're opening and closing is they're slightly gapping up. That is small pullback bull trend. They're buying. Okay, so they're steadily buying. So let's see if we can get that 88, 42, 88 test. But we might pull back from there, so be careful. I'm waiting. I want to scalp there. Guys, didn't hear that, did you? Oh my God, I'm so sorry. Did you hear that? I thought I mute myself, and I even clicked on buttons. I just noticed that I didn't mute myself on. Just tell me you didn't hear that. Because if you heard it, I'm going to have to ask Ken to remove that part on the stream. Okay, great. Thank you. Oh, that scared me. Okay, great. Thank you. Sometimes between the two buttons I miss clicking on the right one, and suddenly people can hear me. You just missed me yelling at other people to be quiet. I was rather loud, so I hope you guys didn't hear any of that. All right, so let's go. 88. I want the 88 test. Come on, bulls. No, I think that will be other way around. But good one. I just yelled at a bunch of people. They were just having too much fun in the office. All right, here we go. 42.88. Come on. Yeah. I kind of miss Al coming in and, you know, taking over the streams without even telling me. And then suddenly I'm off the stream and here comes Al. I kind of miss that. We need to ask him to show up again. All right, so this is kind of bothering me, this upper wicks, but there's no bear bar here. So I'm not interested in putting a stop order underneath these bull bars. I want to see 88 to 88.25 tested. And it can easily break out. It doesn't have to stop there. It could easily get to the 42.95. I'm just not sure It's still small pullback bull trend, but if we start to get bear bars here, we could suddenly test the 20 low, and I sure don't want to see a surprise bear bar here. That would make me want to exit the bull trend. Let's just wait, because bulls are not happy either. They will probably going to buy somewhere down here, and that could be 82.50. They might put a buy order to break even, or they're going to buy this bear bar as a pullback bar, and they're going to buy it, and they might even have buy stop order waiting above 24. That's failed breakout right there, and let me see. Yeah, failed breakout, but it's not an outside down bar, but it's a strong bear bar, so they're selling. But let's see if there are any buyers here wanting to break even. Yeah, they're buying already, but at this point we're probably going to test that bar 19 midpoint, and we are testing right now, so there will be some buyers wanting to possibly break even, chance to break even. It probably wants to test the midpoint 20 low, but there's also I don't think no one's selling here. It's just a scaring some of the bulls, and those bulls are buying at the midpoint of this bar 19, trying to break even. Okay, so possibly somewhere here, but it's kind of difficult because this is a good sell signal bar. So the bears are making money now. We might have to wait until market tests the 20 low. So what happened here, why is this happening, is if you take your time and actually measure bar 19, you would know exactly why this happened. Okay, so that would be trap zone. Okay, so the bulls got trapped there. Here we go. So you're measuring this outside bar, inside bar, failed breakout. Okay, so 111% to 88 is a trap zone, and there's no bull breakout, so it's trapped. That's why I said I want to see the 42.88, but no bull bars closing. Now this close, you could either exit out of 25. Some will buy down here, and they're going to look for a break even before exiting out. So probably right here, 20 low-ish, and a breakout point 18 high, probably buyers there. And as we come down and test the 19 low, the trap zone, bulls are waiting right around here to here, waiting to trap the bears. So it could come down and it could bounce, and it could take out, give these bulls stuck up here a break even right around there. Bears trying to test that trap zone underneath bar 19 and lower 1/3 of bar 19. They have a 10-point starting take profit starting at 78.25 to 77.25. So if market could reach there before bouncing to the upside. So no one may show up to buy until we reach that price point. There's a double bottom. I said that we're going to test that midpoint 20. Buyers did show up there. They're trying to break even. But I think the bears definitely want their at least 9-point target, which is 78 to 77. I think that's what they want. So I don't know if this double bottom is going to hold here. It is a trading range. We did not test one tick below 20, so we have an inside bar. Some bulls are buying, and they're trying to break even. Okay, so they're still trying to break even. That's what I said. I think we might need to test the 20 before we see first bulls. but with this bar being this big, it might go up and it's going to look for a second leg down. Okay, so, and it wants to come down and test the 78 to 77. But first we need to get some of the bulls out of the markets. They're stuck above, so they're looking for break even right here. Okay, so I'm one of those, and I'm trying to break even here. It hit my break even, but it didn't fill me. It's because my exit is one tick above. It's a trading range, so you can also measure this trading range. Midpoint is right there. This is kind of bad for the bulls because it's a strong bar and this is a pullback. We might need to get a second leg down. I like to see a little bit more pullback to the upside and get these bulls out thoroughly, but it is not a bull bear market, so I don't want to sell. And this is an inside bar. If the bar closes on its high with a bull body, there will be buyers waiting one tick above that bull bar at 27. So I don't want to sell. I want to still wait to break even and hold a one contract just to see if we can actually get back up to the highs. Okay, so I broke even and I'm holding a contract. Okay, so let's see if we can. Yeah, I broke even there. I'm holding a contract just to see if this bulls can use this bottom and you know, trading range lows and then go right back up again. They need to break above this apex and get back up here. But it is a pullback after a first leg down, and bears probably want a second leg down and test of 78 to 77 down below. So if this ends up being just a break-even pullback, and we might end up getting that second leg to 10-point area down below. But I minimize the risk, so I can always buy down below. Okay, so, I'm just not worried about that, but I wanted to lower the risk, and I did that, so I feel good about it. High one right there. So I was long. I was looking for if bars are building above the midpoint. I held it. I was looking to scalp to 42.88, but trap zone stopped the bulls in their tracks. So I bought it again, lowered the risk with bar 27, and I'm still holding a contract. I kept saying that I'm looking for 42.88 to be tested. I don't know if you heard me like 10 times. That's the second leg right there. So bears are still trying to come down to the 78 to 77 area. But it's still a bull trend. So that could be a second leg trap at the EMA as this leg comes down. It's still a bull trend. So bulls might be looking to buy the pullback. And other bulls, other bears stuck here, they're looking for a midpoint. Okay, so we're testing this trend line, but I'm going to clean that up a little bit. Now, if we get this 10-point move, even if we get it just a 9-point test, this will be obsolete, okay? So it's no longer, in fact, I think I'm going to get rid of it because we're just about to, we might test that 9-point. But the market is very bullish still. If we fail, if the bears fail to test that 9-point at the minimum, and suddenly we go back up because it's a trading range lows, then that 40-point is going to be target, and then the measured move to the upside. Okay. We might get the 4,300. It's not far from the 40-point. So 40-point bulls are trying to get their full trend 42.9725. And in fact, we may not come down, okay, before we make a wedge top. So here's a pullback. We might go up here, which might give us that 40 point, and then we could come down. Okay, so that would be a wedge top, lower high, major trend reversal. So it's kind of important right here what the bears are going to do. If they fail to get that minimum 9 point, okay, so they may not be able to reach the moving average. And if the gap stays open, we could continue to go higher. But it's been 20 plus bars, okay, so it's been 20 plus bars. We are kind of due to test that EMA, okay. So maybe one more time we trap the bears here, we go back up, and we make that wedge top, get that 40 point, and then come down. So we still have not tested that 42.78. But the moment we touch that, let me see, I might be wrong there. Actually 78.25, 42.7825. We test that, then I'm not going to be so thrilled about that 40 point or 4,300 up above. Up, okay, so we tested it. All right, so bears created a reversal here, and it's basically closer to a 10-point swing here. So this counter trend now is strong because bears want to come down and test the EMA. But chances are, okay, there are buyers waiting there. Bears still can come down and test it 77.25 and the EMA. But it is not a bear market. Probably buyers waiting there. I'm going to open the chat box since there are a ton of non-members in the Discord and they're not really respecting my wishes when I'm streaming. I want the space to be freed up so I can take a look at the members' comments. So I'm going to open up the chat box, and but I'm going to be able to take maybe like a 2 or 3 questions. I don't want to take too much of Brad's time. Right, so I opened the box in the webinar. If you want to post questions there, I'll just take a few. Yeah, I could do that. Successful luck. So anybody's stuck here, okay, if anybody's stuck here, they're going to buy down here, and they're going to try to get back up to the midpoint. So we might get there to help some of the bulls maybe exit out that they haven't exited out here, but we might also get right back up here. So we get an 80% chance of reaching this midpoint, mid-range, and a 60% chance reaching up there. So what I've done here, I bought, okay, and I bought again. I was holding one contract. I bought here as soon as the bears reached the 10-point zone, and they're taking profit with bar 29. So I broke even with old contract, so I'm looking for a little bit more to the upside, see if we can actually get up somewhere here. So I'm making a lot more than what I was making before, which is great. Like I said, it's still a bull market, and there is no selling here. It's just a pullback. Bulls probably trying to get above this midpoint and reach up here. But we need to close bull bars above 82.50 first. However, we might get a double top with bar 27 high. Be careful. Although it's a bull bar, but we could still make that double top. So be careful there. some bulls will actually scalp right there. Okay, so we're testing that. I don't think we're going to be able to make that double top, so we should keep going higher. But many bulls will scalp there, give themselves profit, and then they might hold it all the way to up here. Okay, so we trap the bears, which I warned you about. Bears might be getting trapped at the lower 1/3 of bar 19 and a little bit down below. This is a trap zone. So many bought above it. Now they want to get back up here. So I'm holding all the way to up here. And we're probably going to test here. We might even test right there, possibly measured move for bar 19 range. Okay, so a couple of questions. So I'm going to read these questions. Have you only scalped long today? No, I also scalped shorts. I did scalp. I believe I sold here a little bit, and then I scalped there. But all here I was long, and then I start taking profit. Now we could make it head and shoulders. Be careful. Sometimes the smallest head and shoulders patterns can be the ones that are holding a big punch. We do have a possible head and shoulders, could create a reversal, because we do have a wedge here, double top, lower high, depending on how these bulls are scalping. They're trying to get back to the high. They're trying to close a bull bar above the 86.25. If they get that, then there's no head and shoulders. We will keep going higher and higher. First target, second target, and a third target, and a measured move target. Okay, so which we have to use for measured move. Oh, so you're asking for what do we use for measured move? What are the measured moves? There's several different measured moves. For bears, this is what I did. Okay, I took that. That was my measured move. If you take this, you may not get it. Upper wick, I don't like that. I'm trying to measure exactly where bears start to sell. So that was my measured move target. Now for bulls, anytime bears are selling, okay, they have stops, maybe up here, here. Once we breach that high, okay, so we're running some stops already. I could do this. Okay, so let's see. That's my measured move right there, 1-to-1, and that's 2-to-1. But then we started to break above. Okay, so here's what I'm going to do. Not that. Okay, 1-to-1, 2-to-1, 3-to-1. Bulls are trying to get to the 4-to-1 target. So that's risk reward. But and the other measured move, here I'll just mark that. That's 4-2-1. Here is structural breakdown, inner structure. That is the measured move. Okay, you can take that right there. So they're still trying to get to the 87.50. But normally, if there's a bull bar and a bear bar, if there's a leg, I tend to measure this, and that is my measured move. And we met that measured move right there. And that's the one that I use. I don't know if you guys remember, and then I removed it. So now there's a bigger measured move, which is this entire range breakout with a pullback, which is right there. Or you could say, what if I measure this? Like, because there's a breakout, right? So if I measure that, then you have continuation targets. Okay, so let me get rid of this. You can have this on your chart. Let me get rid of that. That is trying to get here. So it's measured move, and that's the 4-2-1. So but the only problem here is that if we reach here, we might overshoot a little bit. This area could act as resistance because we're doing 1, 2, and possibly third push. and that could create a major trend reversal. So be careful there. Okay, so the other question, you mentioned using 4 bars for ATR. What is 4 bar ideal? 4 bars is basically I'm looking back 4 bars to decide how much I can scalp. Basically, I am looking at only 4 bars, about 20 minutes, okay, of a price action to decide if I can get a second entry long, if I can get a second entry short. Are we in a limit order market? Are we in a stop order market? How much the market can move? That's what I'm looking for. It's less than half hour, so it can turn into a swing, or it could be just a scalp. You can look back 5 bars, maximum 6 bars. I wouldn't go no more than 6 bars, because you don't care what happened beyond 6 bars. You want to see, generally, you can get measured moves set up with 3 bars like this, 3rd bar break in, and that's your 4th bar. So that's 5 minute, 10 minute, 15 minute, 20 minute. In 20 minutes, you need to be able to make money, okay? That's my whole thing. If I'm not able to make money in 20 minutes, then I shouldn't be in the market, okay? So you need to be able to find trades that could last 20 minutes to give you profit. So that's why I'm utilizing 4 bars, but really is a 20 minute period that I'm trying to cash in. This is going to be a stupid question. There are no stupid questions. You can ask anything. This is going to be, I'm not going to do it, but how are you drawing your support and resistance in the morning? I try to mimic you, but sometimes your lines are in the middle or other bars, and I can't find reference points. Well, I don't think today I drew any support and resistance, but let's take a look. So there's nothing to the left, okay, so I can go by. The only thing that I can use may be higher time frame. So I'm going to go to 60 minute. Even then, I don't have enough space here. So let's do. Okay, so market is going higher and higher. I think I got my. Actually, I'm wrong. I did have support resistance, but it was on the 15-minute chart, but I removed it. So let me go to 2 hours. You're not going to get anything. Let's go to 4 hour. I do all that work early in the morning, like 7 a.m., 8 a.m. latest. So I had that on the chart. I have to just redo the work now. Hold on. I don't have enough information here. All right, let me, because that's not where I did the work. Let me close this and get back to here. Okay, so this is resistance to me. Okay, so here's what I found. See right there, which I talked about it pre-market. I said this is resistance right there. Okay, so that's the one that I put on the chart. I also had this gap right here. You can take the entire gap. Okay, so that's what that 65 came from. I don't know if you remember. But we breached well inside this resistance right there. So you can use the daily. Okay, so this gap all the way to the bar close, from this bar open to close, it's resistance. You can also measure and find half of that. Okay, there's a little bit more room to the upside that bulls might push, but really this is what I'm using at this point. This is what I'm interested. And I did say that we're probably going to get there. Okay, which we did. But we might continue going higher. I still have bull targets to the upside. So then I would be more interested in this right here. It's the heart of this gap, just about. Okay, so market keep pushing higher. So I utilize those levels. You can also do it on the ETH daily chart or ETH hourly chart, 4-hour chart, whatever works. Market is bullish. It wants to keep pushing higher and higher. But normally, if you can also get all of that information, okay, on the 5-minute chart. So I'm going to leave those there. This, I'm getting all those targets, some from the 15-minute or hourly or 1 hour, I just added on to 5-minute. But if you, by looking at this, you should also saying, hey, listen, there was a pullback and breakout. So this right here is going to act as a support. When the market comes down here, it's going to look for, okay, is buyers. So that's one way to find your support. But before then, we now have is support right there. Okay. As we pull back, and then it also support right here. Bar 17. So as market comes down, there will be probably buyers waiting there. Okay, so for the resistance, I'm getting that from hourly chart because it's pretty wide, pretty open space here. So market is going to keep pushing higher if they can take out these highs. The only problem here now is that we might be making a right shoulder here. Now, if we're making a right shoulder, then we might have a neckline. Okay, so if we get a bear bar here, we could quickly come down here, maybe a bounce a little or break and then bounce. We could break the support and come all the way down here. We might even test that high first and then find buyers. Okay, so if no more buyers here because we kind of reach a bunch of targets there, but I think we might keep going higher. I don't know. I don't want to sell just yet. I want to wait to see if the bears are going to get another bear bar. If we end up getting a bull bar, bar 32, then we're going to keep going higher. Any head and shoulders pattern can be invalidated any given second. So I don't look at patterns as my trading guidance. You know, I just look at them always as that they're going to get invalidated anytime. So I trade the bars. It's more important to me. If I sell this right now, one tick underneath 31, there's a high chance of actually bulls trapping me there and filling me and then trapping me and then breaking from above bar 31. I do not want to be in that mess. So what I do is I get the high point of the left shoulder and I wait for, okay, bulls to test this line and create a bull bar or print a bull bar, bull body, one tick above. Once we get that breakout, we probably won't have a head and shoulders pattern. We could continue to go higher. But if we start to get bear bars, okay, then I'm looking for this neckline to be broken. I might wait for market to get there and then retest, and then I can sell that pullback. That I can sell it all the way down to bar 10 high, or maybe even somewhere inside this area. But before then, market is bullish. I do not want to sell anything because look how easy it was for me to fix as I was stuck up here. Twice I bought lower and fixed a bad trade and I made money. So if bulls are able to bring the market back up to highs, there's a high probability we can actually break this second hour's high and then go higher with the third hour, which is going to, in about 20 minutes, this hour is going to come to an end. So the bulls may want to actually bring market back up to here, which always been my target, 88.50. So therefore, I don't want to sell. Today is difficult to find support and resistance. is because we're keep gapping up and we're in a bull trend and a bull channel, and we're making new highs with a bunch of gaps. So this is your support. If we do pull back, we have double top, lower high neckline. You want to see bears actually take out that 29 low, dip, and then pull back, and you can sell that bear flag. But there's no bear flag. I do not want to sell it. This could end up becoming a bull flag, and if I sell something, how much is there for me to make? I don't know. Is it turning into a major trend reversal? I don't know. It's not ready yet. So, but for pullbacks, this is your support. It's your support and support. Okay. I'm going to take one more question here. Okay. I think the Brad is waiting for me to leave. I think, can this turn into a trading range and sideways? We already broke out, and the bulls want, okay, continuation. In order to reverse, we need some kind of a wedged up, okay? So if I sell right now, this could end up coming down here, but it could give us a wedge bull flag, and if we start to get big bull bars, then we could get back up here. This is what I like to look to sell into here. Okay, so I don't want to sell right now. Bulls can keep that gap open to EMA. It looks like it's selling right now. Looks like it wants to touch the EMA. It's so close to the EMA, but even if it comes down to EMA, it could end up becoming a bull flag. Okay, so do not want to sell and hope that it's going to come down here. It may not. Okay. One more question. About bar 14. Question here is, was bar 14 close reasonable to buy for a swing, or a trader should wait for breakout of high of bar 3? Wanted to buy but had lower confidence due to TR behavior. I totally understand that, but I explained why bar 14 was a good buy. Okay, so let's talk about that again. You already have a TR here, but I kept saying that we might move underneath bar 1 because we had a target there, and that market started to come down. It's because when you gap up like this, okay, so it's too high to buy. Bulls might think that this isn't a good average price for them to buy and mark it up and go higher. Even though we have 2 bars, okay, continuation, okay, bulls are buying. Look, it's gapping up a little bit, but it's just too high. So you might actually look for an average price. So if you take, let's say, 1, 2, 3 bars, at this point you're not seeing any of this, and you take 17 bars from the prior day. You take a 20 bar range and you find your midpoint, which was around here. And I said, we might try to come down to that midpoint, and the bulls may want to buy that instead. But I also said, we're either going to make a double bottom or we're going to make a wedge bottom until we get to that, okay, average price, or the EMA is going to catch up with that average price, and we might keep a gap to the average price. And I said, if we keep a gap to the average price, then I'm going to look for a swing high. But trading range is trading range. Every time you have a trading range, okay, so market goes up, it comes down. Suddenly you see this big, beautiful bull bar. If you try to buy it, machine's always looking to sell that bar. Even if there's a little bit of gap between the high of the trading range and the bull bar, between the high of the trading range and the bull bar. And I said, bar 10, bear machines will always try to sell that because it's trading range, and any bull bar, they're going to try to bet against it. But the only problem here, I said, and you can rewind and go back and listen, is this little air pockets that Al Brooks calls, and I call them voids, okay? sets the market to have stop orders. Okay, so bears and the bulls can stop orders. Limit orders will make money, stop orders will make money. What does that mean? Is anybody who bought above it upsets, okay, bear machines will sell that because they see a trading range. They try to scalp about 2 points. If they get more than 2 points, they're going to try to target a breakout point. Breakout point number 1, breakout point number 2, above bar 7 and above bar 8. And I even said this area is support. I even did this exactly like that. And when the market gets down here, okay, even though stop orders underneath bar 10 still make money, but there are buyers here who are stuck here, will buy there, and we're going to go up higher. So we did that. So the bears could not bring this further down or give us a wedge bottom. We got bar 12. So then I said we have 4 bar trading range, 9, 10, 11, and 12. And then I said this is still TR behavior, smaller trading range is inside a bigger trading range. Okay, but failed breakout for bears. Bulls started to buy above it. Bulls now buying the pullbacks. Okay, so even the bear machines will try to sell the close of bar 12 because they want to bet against the bulls. This may not continue down. And in fact, we did not get bar 14 as a bear bar. When the bar 14 closes like this, 1, it's closing above an inner structure. 1, inner structure 2. It's also, okay, now a breakout bar and bunch of void air pocket. Chances are it's going to want to go test that high. And if we get another bull bar, you can even buy above it. And if we get a breakout bar, look for a pullback. If it closes bullish, buy above it, so you're long. Okay, so bar 14 is a good bar because bears fail to sell with a second leg, because this was the second leg. First leg bears, second leg bears failed. Bar 12 is your sign that those bear machines, limit order machines, are failing. Stop order machines are coming in because they see this air pocket. Okay, so when the bears try once, when the bears try twice, there you have it. You see bar 12, and you see there's no continuation and test of the lows. You got a beautiful double bottom. You got a beautiful higher low. It happens to be an inverse head and shoulders in a way. Okay, so bears could not take out that left shoulders high. So what are we looking for? We're looking for a good buy signal bar, test of the highs, and a breakout. So basically it's 10 and 11, and furthermore 12 trapping the sellers. Then those guys try to get a second leg down, failed, immediately buy above that bar, or buy the close, but buy. You can even put a buy stop order above it. They would activate you, come back. If they close a bull bar, buy above that one too. So that's how you keep adding to your winning trade, and it gets certain highs, and you can scalp a little bit. That's where I started to count points, and I took profit. Okay, so we have a wedge here, higher low in a way. Bulls are still trying to get back up to here. We didn't even test this left shoulder high. So you see, I'm not sure if this is actually a head and shoulders pattern anymore, unless this turns into a lower high. I think this is a bull flag, and the market is trying to break out from this level, and it's trying to get back up here. But we'll find out. If we get a rejection somewhere here, okay, so then we might actually be sent back down. But the buyers are waiting here, buyers are waiting here. Bunch of bears still stuck here. They might be trying to bring the market down here to get a break even or reach the bar 10 high, but they have to show us that this is a head and shoulders pattern, left shoulder, head, right shoulder, and that this is a lower high that the bears are looking for, and the next bar has to be a strong bear bar. If the next bar is a strong bear bar and it's taking out the 34 low, then we will come down here. We will break it. We're going to give them break even. You're going to get a bounce. And if we test that neckline and sell again, this will be your target. If you do not get that bear bar, we test this left shoulder high and start to close bull bars. And this is where we're going to end up going. Okay? So market is deciding here. All right, I'm going to leave you guys with Brad now. You guys have a good weekend, and I will see you guys next week. Take care, everyone. Sorry about the questions that I couldn't answer. I'm going to try. You can also send me these questions privately. I can answer them when I get a chance, in case I miss them in the Discord. Otherwise, yeah, I mean, you can just send me a private message as well. Okay, bye, everyone.
Hey, everyone. So we're testing the moving average and probably going sideways here. We may get a second leg up, but we could easily test down to the 3 high. Give me just a few more minutes and I will talk some more about the day. Consecutive bull bars, so some traders buying, but I think we have to get closer to the moving average. This is selling pressure in here, strong breakout sideways, and we came really close to the moving average, but we didn't get there. That makes me think that this could be a trap and we may have to get closer to the moving average. But we could certainly break out to the upside before we pull back to the moving average. So again, I think this is the problem for the bulls. There might be more sellers up here. I have the question box open, so feel free to ask questions in the GoToWebinar box. I am waiting. I want to see the market get closer to the moving average. And the reason is, I think the odds are, even if we go higher, we're going to pull back to this. If you read the blog, I thought today had the potential to get an upside breakout. We're at the top of the trading range, the February 2nd high, and we gapped up above it and we're breaking to the upside. So to me, this is good for the bulls and increases the chances that the market will rally up to the August 16th high. Why? Why the August 16th high? Because it's reasonable to buy up here, and these bulls got trapped, and a lot of them likely, if they stayed in, they bought more lower. 60% chance the market will get back to the August highs. 80% chance the market will allow them out break even. Three consecutive bull bars, but not yet at the moving average. So I think we may pull back. So we are continuing to rally. And this is always one of those interesting, it's always in long, maybe always in short here, but it's more of a trap. You really want to be selling below bar 1 after 3 big bull bars. The reality is there's probably buyers below. And the problem with here, it's always in long, but stop placement is the issue. That's why I'm hesitant to buy. Now, if I was buying, how would I manage the trade? I would probably consider exiting below a bear bar. So why is that? You have a micro channel, first reversal down probably will fail, and maybe you get out on a second entry. But my issue is stop placement. This is a good breakout. It's probably going to go a little bit higher, but my concern is we didn't touch the moving average. I would feel better about this if we went below the moving average here. And because we didn't go below the moving average, I think a lot of traders are going to scalp out and want the market to get back to the moving average. So to me, that lowers the probability of this breakout. So if you get a bear bar You know, think about it like this. Here's another way. I often talk about probabilities. If you're buying, it doesn't matter whether you're long right now or if you bought, but if you bought the close of 38, where's your stop? If you put it below 34, that's under the moving average. And if the market goes below 34, what do you think is going to happen? What happened yesterday when the market went below the moving average? It got really close here, touched it, and bounced. But look what happened right here. The market rally is what's going to likely happen. That is my concern with buying up here. It looks like a good buy, but the context is not great. And there's probably going to be profit taking. Now, what about selling up here since we have to touch the moving average? I think some traders will, but it's always more dangerous to be selling in a fairly tight bull channel. And the other problem is micro channel traders selling up here are probably going to scalp out. So to me, I think it's better to wait here, better to look to buy lower, and there will be traders buying and scaling in. The risk of the bull space is this right here. We had a lot of trading range price action on the open, and whenever you get a lot of trading range price action on the open and then you get a rally, you always have to wonder if it's some sort of trending trading range day, sideways, bull breakout, sideways. So I would not be shocked at all if we break below this line, the high of bar 3. Yesterday, we had a strong breakout to the upside, but we had sideways trading on the open, and then we ended up getting a sell-off in here. So right now, I would wait for a test of the moving average before looking to do anything. You can see buyers below 38. They bought below for a scalp. But if we start to go sideways for long enough and develop more selling pressure, the bears will have a chance of a downside breakout. But at this point, we hadn't even broken below the moving average. So I think the reality is if we get to the moving average, which we know we will, there's probably buyers down here. Was bar 18 a good entry? Someone asked that question. They said, I saw a breakout with trapped bears selling the highs of bar 18. Yeah, you know, I talked some about this, I think, I can't remember which day it was. Maybe it was yesterday. I think I talked about it during bar 23 on the end of the day review. But 18 is 17 is a high one buy. And it's a high one within a strong breakout. Yes, it's a possible trap at the top of the trading range, but the reality is any bear that's selling above 17, this inside bar, which it's not a great sell, but any trader selling above it is scalping. And if you're selling for a scalp and then you get followed through like 18, you're trapped. So if you think about it, the bears selling above 17, we're hoping there were sellers above in a second leg down, but instead we got a bull breakout. So all the bears that sold and scaled in are trapped. And if they're trapped, what are they going to do? They're going to exit. And that led to an upside breakout on the open of 19. So I agree with you. I think there were sellers above 17. It sounds kind of backwards. I say there should have been sellers above 18, and I don't want to sound confusing, but what I mean by that is the bears, it's a bad sell. And the bears that sold above 17 got trapped on 18, and a lot of them give up. So why would they give up? Because if you're selling above a bar, like if you're buying below 1, you might let it go 1 bar against you, but you're not going to let it go 2 or 3. In this case, it's a gap up, and this is a strong enough rally. You know there's buyers below. Here, when the context is really bad, you're going to be much quicker to exit when you get bad follow through, especially with limit orders. So we're breaking out to the upside. The bulls want some kind of measured move. I think the risk the bulls face is this is a trap, and we may have to pull back here. So there might be more profit taking on this bar than selling. There might be more profit taking on this bar than selling. So this is kind of similar to the question a minute ago. Hi, Brad. Yesterday, did you say high ones in trends fail or succeed? I thought Al said to buy high ones in bull trends and sell low ones in bear trends. That's exactly it. And what I mean really when I was talking about high ones and low ones is, and I should have stated it a little bit better, high ones, typically high ones fail. And what I mean by that is most high ones, if you categorize, think about every high one, most high ones are going to be in some form of a trading range or a channel where they fail and get a deeper pullback, which means that there's often, if we think about all the high ones, if we take 200 high ones, assuming it's just 200 days of the E-mini, and look at all the high ones, a large portion will fail, have a deeper pullback, and then probably rally. But what I mean by that is whenever you have a trend, if a high one gets an upside breakout, in other words, here's a high one, you think, okay, typically sellers above, and then you get follow through buying, all those bears that sold the high one are trapped, and they're going to use any pullback to buy back shorts. It's kind of what happened on 29. You can see it pulled back. It came really close to the high one and then turned up. So the bears that sold anywhere in here got trapped. They're going to use any bounce to buy back shorts. But in general, you should assume high ones that are within a strong breakout, like leg one of a trend, will typically succeed. And even if they fail temporarily, which means it might pull back for a bar and then resume. So I hope that makes sense about high ones, and the opposite goes for low ones. So you have a tail on 40, so profit taking into the close. I still think there's going to be profit taking up here, and we're going to pull back a little bit, but tight bull channel, I would not be selling in here. I think the bears, it's hard to make money selling as a bear. So it's okay to be long and buy more lower, but I think if you are long, you're really going to want to buy more lower. So here's a question. Someone asked, hi, Brad. This is a general question. Rose was explaining about scalping of high twos when you want to scalp on the high side. Can you give an example? I'm not sure. The person that asked this question, maybe you can type in, give me a little bit more clarity as far as scalping of high twos. I'm not exactly sure of the question you're asking. Okay, question. Hi, Brad, what do you think the chances are of a 50% pullback of yesterday and today's rally before we break higher? So what are the chances of a 50% pullback of yesterday and today's rally before we continue higher? That would, if I had to guess, be near the breakout point. I don't know if we're going to do that today. I doubt we will. This is a strong enough rally. I think the best that the bulls are going to hope for, I think the best the bears can hope for is a sell-off into the close and putting a tail on this bar. But we're breaking out above a lot of resistance levels on the daily chart in the higher time frames. So that will increase the odds that we're going up to here. I still think we're going to try and get up to 4,400, which I believe is the August high, and relieve those trapped bulls. So it's always in long, but probably going to pull back fairly soon. But even on the pullback, probably buyers not far below. There's the breakout point. So we'll probably test it. It is reasonable to sell the high of 24. A little dangerous when you have a micro channel up to 38, but some traders will sell it. So you have to assume the market will go one tick below and allow those traders out. So I think we may have to try and pull back a little bit here. But you can see the moving average is getting drawn up pretty quick. So if we start to go sideways here, we'll get to the moving average. So I think the downside is limited, but I think we are going to pull back. You can see the market came really close to the 24 high and the 39 high and turned up. 39 high is 87.5, the low of this bar, 87.75. So it came within a tick and bounced. So the gap is still open. We'll probably close it. And I think the longer we go sideways here, I mean, I still think we're going to get to the moving average, but I think it's just, unless you're willing to buy and scale in, I think it's fairly tough to do anything right here, and it's probably better just to wait. I want to be really clear. I keep talking about a pullback. My expectation is a test of the moving average. I am not saying that the bears are going to gain control. So that's why I'm saying it's fairly dangerous. I do think the bears selling here and scaling in probably will make money, but the risk reward is not great, and it's really probably not worth doing. So I still think the reality is bulls are buying. My problem with buying up here is if I think we're going to touch the moving average, I don't want to buy until we get to the moving average. It's kind of the same logic I've talked about with the euro dollar. Let me see if I can pull it up. So here's the euro dollar on a daily chart, and we've been in a tight bear channel, but I mentioned that over here, I thought we were going to try and get to the moving average. We have a strong breakout. We came close to it, but we found sellers. My thought is there's sellers above. It's a minor reversal up, but we'll probably have to get closer to the moving average. And you can see, big bull bar, traders sold it. I still think probably buyers below in a second leg up. But back to the E-mini, I think minor reversal down to the moving average, but probably buyers at the moving average and scaling in, using wide stops, scaling in lower. The bears, how can they take control? The bears need to break below the moving average. And until they do, the bulls are going to buy. If you think about the bulls have been forced to buy above the moving average the entire day. And look at the sell-off on 6. Big sell-off on 6. It's 2 legs down, bar 4, pull back, bar 5, and then 6, big bear bar, and everybody bought it. So the market is forcing traders to buy far above the moving average, and eventually the market's going to allow the bulls to buy at the moving average. We're 45 bars without touching the moving average, and you know how many days don't touch the moving average. The reality is we're going to touch it. So a lot of traders, the longer the rally continues, the more likely, the less willing, the more resistant they become to buying far above the moving average without the market getting there. But for the bears, we need more signs of strength. You can argue higher high, major trend reversal, but it's really not that great. Strong rally, trend line break, but couldn't even break below the moving average, and then a tight bull channel. So really, this is not that great. We probably need an even bigger bear trend line. We need a bigger trend line break by the bears below the moving average, and then probably a retest. Until then, we're probably going to go sideways. We broke the trend. We went below the 39 high, but marginally went below it, and we found buyers. So we're getting closer to the moving average by simply going sideways. And I suspect that's probably what's going to happen here. So I think the reality is we're probably going to get a little bit closer to the moving average. But right now, as I've said, it's always in long. Traders are buying and scaling in. So every time the market goes a couple of points below a bar, they're buying and scalping out repeatedly. And until the bears show signs of strength, we are probably going to continue sideways to up. This is one reason why I often talk about trading an instrument where you could trade really small, because it can be difficult to train yourself to buy and scale in, especially even with micros on a day like today. And because the risk can get fairly big fairly quickly. But if you're trading small, I often talk about trading the SPY. I think that's a great market for traders to start out because they can risk very, very little. They can trade 1 share, they can trade 5 shares, they can trade 50 shares, which would be the equivalent of 1 micro. But anyways, traders are buying and using wide stops and scaling in, but that's really hard to do when you're starting out. And it's frustrating. By the time you get a stop entry, it goes sideways. It always looks like it's going to reverse. You get a stop entry on 46, but it's not really going anywhere. We may have to get up to 4,300, the round number. But still always in long, probably going to test the moving average fairly soon. Looks like we're going to try and get up to 4,300. So we may get a buyback in test of 4,300 here. So no surprise, the high of 3 and the low of 29 takes you right to the midpoint. So to me, I think the target is 4,300. We had a strong rally. Here's the middle. Whenever I'm trying to find the middle of a gap, one thing you can do is take a measured move from this high, this low. Here's the midpoint. So I know that the midpoint is a little bit above, but either way, I think the market may try and test 4,300. The question is, can we test it before we touch the moving average? No sign of a bottom. No sign of a top. So still going higher. And we have 2 obvious targets. We have the high 4,300, big round number, and the moving average. And I think it's interesting. It's one of those things where the market's forcing you to buy something extreme, climactic. We have not touched the moving average in 48 bars, and that is climactic behavior. And there's an obvious magnet above. So what it forces traders to do is they trade really small, and they start buying and buying on pullbacks. So they buy every bear bar, and the market drifts up. But so far, nothing that is too climactic to end the likelihood of this move. But my concern is we had a triangle on the open. It's not a great shape, but it's basically a triangle, tight trading range, whatever you want to call it. We broke to the upside. We went sideways here. So to me, I think this is going to evolve into a trading range. So the question on my mind is we have 2.5, basically, we've got a little less than 40 bars left in the day. What are the odds that the market is going to stay up here for the next 40 bars? So in other words, I don't think this bar is going to close on its high. It might, but I think in order for it to do that, we're going to have to pull back and go sideways for several bars and get a late upside breakout. So to me, I think the market's going to pull back, and some of the targets could be the apex of this triangle or tight trading range right here. But before then, the bears need signs of strength. One of the ways they can do that is get a bear bar closing below a prior bear bar. Here's a bear bar. Here's a close below it. That's good for the bears. Increase the odds of a second leg. So now, can the bears get 2 or 3 consecutive bear bars? Can they break below the moving average? Until then, traders are going to buy and buy pullbacks. So to me, I think traders are buying and scaling in, but I have to say, I'm fairly resistant to buying up here when I think we're going to at least pull back and maybe test the 45 low. These kind of days, it's really important to just be patient. It's easy to feel really bothered by these days. And I try and keep things simple as far as if the market's drifting up, but it's not touching the moving average, everybody knows every bar that goes on without touching the moving average increases the odds that you're going to get to the moving average. So traders keep wondering, even if is this bar going to be the bar that tests the moving average? So when you get bars like 47 closing at a new high, traders take profits. Why? Because they think the odds are it's going to go sideways or go a little bit lower. If you thought the market was going to go sideways or lower, or even if it went up, it was going to pull back, traders scalp out. So to me, I think it's better to just wait and see the market test the moving average. You can see not a lot of buyers at the moving average. It's hesitating. So still may pull back a little bit, but I think the reality is there's buyers somewhere around this area unless the bears can start to get 2 or 3 strong closes below the moving average. Until then, probably bulls buying the moving average and scaling in lower. Bull bar 52, but a micro channel since 47. So not a great sell above, but there might be some sellers above 52. But it's the first buy at the moving average. So bulls probably buying above and scaling in lower. Tight trading range since bar 42 lowers the probability of the buy, but it's a test of the moving average, and there will probably be bulls buying in this area. And if the bulls can start to get 2 or 3 consecutive bull bars, that will increase the probability that we get up to 4,300. But I would get out of shorts above 52. Too much risk. Small pullback trend, not worth being short. Bad follow through on 53. A warning that the market may go more sideways here. So the bulls that bought above 52, 53 is a fairly disappointing entry bar. It shows lack of momentum. So probably going to go more sideways here. Bears getting their downside breakout. This was my concern with being long. Decent selling pressure. And what are the odds that we go a lot lower? I don't know. It's a decent bear bar, probably a second leg down. But to me, the bears need to get closes below the moving average, meaning they need to get at least a few bars below the moving average. Otherwise, probably buyers below scaling in lower. But to me, I would wait for, this is a big enough bar. You may have bulls buying the close and scalping, but this bar 56 may get its own second leg down. So I think better to probably wait and see how this bar closes. Decent bear bar 56, but probably buyers below scaling in lower. I suspect there's buyers below the moving average. First test of the moving average, first bar to close below the moving average typically gets bought. Therefore, we may bounce here, but we went below the moving average for the first time today. So that is a sign that the bears are becoming stronger. So for me, if I took the short below 55, which I did not, I would get out above a bull bar. I think the short below 55 is a minor reversal. It could go a lot lower, but the reality is, in order for it to go a lot lower, probably need consecutive 2 or 3 consecutive bars below the moving average, and even then, probably sideways, more likely. Good bar for the bears, but let's see if the bears can get another bar. It's an inside bar. If this bar closes on its high, it'll be a micro double bottom. We went down on 56, up on 56, down on 57, up on 58, assuming 58 closes on its high. But 57 is disappointing for the bulls that bought the 56 close. Some bulls buy the 56 close, and they're deciding what to do here. You can see what happened on 58. The close of 56 was 87.50. The high of 58 was 88 even. bulls bought the close at 56, and when 57 was bear follow through, they immediately got out at the close. And they would only do that if they thought that odds are the market may have at least a small second leg down. So not ideal for the bulls. But I think the bears, it's not clearly always in short, so the bears need a little bit more. Would I buy the close at 57? I would not. To me, although it's probably going to go sideways, my concern is those two consecutive bear bars. We could easily test down to the apex of this sideways area. So to me, I'd be concerned that we have to go a little bit lower. But I'm not interested in selling the close yet. To me, bull trend typically evolves into a trading range, which means the trading range bottom is probably somewhere down here. It could be the middle, it could be the low of 29, but it's somewhere in this area. So I think the reality is bulls buying and scaling in probably will make money. At around 2 o'clock, so in about 40 minutes from now, I'm going to review a lot of the questions and start answering them. It's hard to watch the market and answer questions, so I may try and start answering around 2 o'clock, start reviewing a lot of the questions. Buy above 58, but 4-bar micro channel might be more sellers above. Second, it's a 20 gap bar buy. First bar below the moving average, so probably an okay buy. You can argue it's a micro double bottom, down on 57, up, down on 56, up on 56, down on 57, up on 58. But I would certainly get out of shorts above 58. For the bulls, they want to test 4,300. And the bears, they want a major trend reversal, but I suspect probably this reversal down is minor and we'll have to test the highs. So far, good entry bar for the bulls who bought above 58. If this bar closes on its high, that will increase the probability that the market's going to try and test 4,300, the blue line. Some bears who sold the high of 58 probably disappointed on 59, and they may buy back shorts back at the 58 high if the market gets there. So the current bar is retesting the 58 high, and there might be buyers there, more buyers there than sellers. The bears, they want this to be a pullback from the 55 retest. So the bears, there were some bulls who bought the 55 low and more lower, disappointed. They used the retest on 60 of the 55 low to sell out of longs. And some bears, the bears know that, so some bears are selling right here. But forcing you to sell at the moving average in the middle of a tight trading range, not ideal. The market could go sideways for until the final 30 minutes of the day. So right now, if you look at the daily chart, this bar is basically closing on its high. And I think the market's deciding, is the end of the day going to form a big tail on the daily chart, disappointing the bulls, or are the bulls going to manage to close this day on its high? This day is already very impressive. So that alone, the bulls have achieved the goal of getting follow through. So it's not a matter of if we're getting back to the open of the day more than it is how is this entry bar going to close. Right now, I think the best the bears could get is a close of maybe at the midpoint of the day. But even then, let's look at it like this. The midpoint is all the way down here. So the bears have to get all the way basically to 42.71.5. Let's just call it 42.72. They have to get all the way down here to get the close below the midpoint. And at the moment, I don't think they're going to get there. But right now, you're in the middle of the tight trading range, and the probabilities are not great for doing anything. It's a swing buy, taking a chance we break out to the upside, and we test the highs of the day. If I do anything, I guess I'd be long, stop below probably 58, but I'd be pretty quick to get out if there's any disappointment. So still on the swing buy, and are we going to get to 4,300? We might. You always have to be a little concerned. You know, whenever I'm looking for breakouts, I'm always trying to look at and see, are traders trapped? And when you have trapped traders, that's a warning that the market's going to go higher. So look over here. Who got trapped? What did I say about the bears that sold 58 high? It's a bad sell, but the bears that sold it, they got trapped on 59, this bull bar. And if you're a bear, always, you always want to put yourself in the shoes of the opposite trader. If I'm a bear and I'm short, how am I feeling? That's how I'm always thinking that. If I'm a bear, what am I thinking? If I'm a bull, what am I thinking? The bears, you can see, they sell the 58 high, they get trapped on 59, and on 60, the pullback, it doesn't let them out. And then we're rallying. So open gap. We're in a bull trend. We've been always in long ever since probably bar 9 or maybe 14 and 15. We never went always in short here. And now we have a small gap. And I'm always thinking, when I see a gap that's open in a trend, possible start of an upside breakout. I suspect the bulls will be disappointed. Now, if I'm a bull and I bought 58, I am definitely taking part off up here. You can take the chance. It's always in long. It's a bull trend that we rally into the close. But to me, it's still a little early to get a rally into the close. So even if we get up to 4,300, I don't think we will close above there. We might, but right now, I think sideways is more likely. What about selling? Would I short above 55 or 48? I would not. There's probably sellers above, but bull trend day, this could be a measuring gap. We could get an upside breakout. We have an obvious target above. I would rather wait. And again, I want to make it clear. This has been a trading range for a long time. We're finally breaking out above it. So when you look at this, are you thinking, I've got to sell today? Well, if you're looking at the daily chart, are you thinking, oh my gosh, I've got to race and hurry and sell this before it reverses down? Or are you saying, this is pretty strong. We may go higher. To me, it looks like the latter. Strong enough breakout yesterday and today, we're probably going to get a second leg up. So to be clear here, I would either be long or flat. I think it's okay if you're long to take partial profits around the high of the day. Some traders will swing, taking a chance we get to 4,300. But I think it's not worth being short. Still always in long, breaking out above the 48 high. Possible wedge, 24, 48, and the current bar. But I think the channel up from 58 to 64 is too tight. Better to wait for more selling pressure. I think the only question here is, if you're long, do you take profits? Or do you take a chance and see if we get up to 4,300? It's only 6 points away, so we could easily get there. This bar closes on its low, you'll have traders exit. So you'll have some bulls start to exit. Top of a trading range, double top, so reasonable to exit. I would get out of longs below the prior bar. 65. Possible higher low major trend reversal, and we could get a sell-off. So I think better to exit and wait and see what we get. if it's a trading range, not ideal to be long with a stop below 56 because we could easily fall below 56. If you think this is a trend, the market should hold below the market should hold above 56. But to me, this looks more like a trading range. But minor reversal after a tight bull channel. So this could be minor and still lead to an upside breakout. Bears taking profits near 4,300. Excuse me, bulls taking profits near 4,300. So 68, second entry short. I would get out below that bar. I don't think it's worth. It's near the moving average, but I don't know if it's worth staying long. You have to wonder if you're going to get profit taking into the end of the day. So to me, I think it's reasonable to exit the longs below 68. Better to wait and see more signs of strength before shorting. I won buy above 69, but you can argue small pullback trend. So close to the target, we may have to get there, but you're starting to get selling pressure. Some bulls get out below 68, and then they buy again above 69, taking a chance we rally to 4,300. Someone asked if there will be a Q&A tomorrow. There will not be a Q&A tomorrow, but I will try and do one maybe early next week. And I'll try and extend the Q&A session perhaps today or the end of the day review. Okay, question. This was at 11:38, so right around bar 34. Hi, Brad. Under what circumstances will bulls think that they will stop waiting for the moving average and take this to a wedge top? 319 and something else, so 319 and then over here. So at around 11:30, what are the chances that we're going to continue to rally to form a wedge without touching the moving average? Yeah, it's reasonable. And when you get situations like this where the market's going to test the moving average, a lot of traders, they start buying small and scaling in, so they can at least be in a position and in case the market continues to go higher. But you can see we formed a wedge, 1, 2, 3, and then we reached the moving average. But I thought this right here was a warning. We failed to reach the moving average and we rallied higher, and I thought that increased the probability we would have to get closer to the moving average. Here's a question. Question at 11:39. My confusion is from hearing both bulls want to keep this gap open, quote unquote, so we're probably going higher. So this was at 11. So bulls want to keep the gap open at 11:38. I'm assuming, maybe the gap from the 3 high to the 29 low, or the gaps from in here. And also, bears want to close the gap, so we're probably going lower. Yeah, let me clarify. On the way up around 35, 36, 37, I was saying bulls, they want to keep open gaps. So the low of 37, high of 34, they want to keep the gaps open. The bears, they want to close the gaps, like they want the market on 37 to fall below the 34 high. The reason being is if gaps start closing, that's a sign that we're going to evolve into a trading range. Another bear bar on 71, I would exit. I think, again, too much. We keep trying to break to the upside and failing, and that increases the chances that we may try and do the opposite and test lower. Also, we're getting late enough in the day that the market's deciding what kind of tail will this bar form. So right now, we're very close to the high of the day on the daily chart. And if we sell off down to the 57 low, that would be 85.21, which would be at least a small tail above the bar. So we could easily sell off down in this area and put a tail on the daily chart. I would get out of shorts or get out of longs. I think it's probably better to wait for Monday at this point. So here's another question. Brad, just curious yesterday if you took the second entry short below bar 69. I did not take the short below 69 or 70. Would your target be the last horizontal range as the final flag? I think that's reasonable. I think it's okay to sell 70 and taking a chance we get a sell off into the close or a test of over here. I think that's okay. And you can see, obviously, a lot of traders got out below 70 yesterday. So I think that's reasonable. Better to be flat and wait until tomorrow. Sideways around bar 72, probably going to continue sideways for the rest of the day. Overall, the bulls have done, so far, the bulls have done a pretty good job. And obviously, we're going to have a bull trend day, but it'll be interesting to see. I suspect we're going to go sideways into the close. The bears want to put as big of a tail as possible on the daily chart, but the reality is just look at the past couple hours. We've been sideways, and we're probably going to continue sideways into the close. Weekly chart, strong bull breakout above February, so that is good for the bulls. It'll be important to see what next week looks like, but I think this dramatically improves the probability that we're going to go back up to here. I say that. It increases the probability that we're going to get up to the August high. I still think, the reality is even if we sold off down to here, we were probably still going to get there, but bull breakout probably strong enough for a second leg up. Daily chart, more or less the same thing. Breakout yesterday, followed through today, closing above a lot of bars to the left. Probably going to go at least a little bit higher. We're at 4,300, really close to it, which is the measured move target from the low of March 13th to the high of March 22nd, which projects up to here. But so far, good breakout for the bulls. So coming into the open on the Globex session, you can see we had a report that was released at 7:30 Central Time, 5:30 Pacific Time. And it led to a pretty strong upside breakout, deep pullback, basically tested the midpoint, and then a rally. First bar of the day, bull bar closing on its high. And one of the interesting things to note is it's a big bull bar, but look at the tail below bar 1. The tail is pretty small, which means the tail below the bar, the open is very close to the low of the bar. Even though the open is 55 even and the low is 475, that increases the probability that the market will fall below the low of bar 1. And the reason for that is typically on the daily chart, you do not have a bar where the open of the bar is the exact low tick of the day or high tick, and typically you get a tail bigger than 1 or 2 ticks. Bar 2, consecutive bull bars, but smaller bull body than 1. Is it by the close? It probably is, but traders need to be prepared for a deep pullback and a possible pullback below bar 1. 80% chance there will be a minor reversal, but strong gap up and follow through increases the probability of a possible trend day. 3 consecutive bull bars but smaller bodies increases the probability of a pullback. And then 4, bear breakout, but after 3 bull bars, probably buyers below 3 scaling in lower. 4 might be enough of a surprise that we may get a small second leg down. 5, we have an inside bar, high 1 buy. There might be more sellers above 5. If you're a bull and you bought the 3 low and you bought more lower, you're sufficiently disappointed, which means traders who bought the 3 low and more lower might use any rally to exit break even or back at the 3 low. And then 6, a second leg down from 4. We had a breakout on 4, pause on 5, second leg down on 6. And then 7, we have a micro double bottom. Give me just 2 seconds. 7 and 1, always in bears. If you're short, I would get out above 7. 6, I don't think that was enough to make it always in short. We had a gap up and follow through on 1, which means even if we fall below 1, probably buyers below. 7, bull bar. 8, a bad follow through bar, but it's a bad low 1 short below 8, which means buyers below 8 and scaling in lower. Strong enough bear breakout, first reversal up may fail. You can see the bulls that bought the 5 low or the 4 low and more lower are getting out around break even. 9, we have a bull breakout. A little bit of a surprise. Is 9 by the close? It might be, but it was reasonable to sell the 7 high. It's not a great sell, but the odds are there should have been a second leg down. And you can see the market rallied and pulled back, and then on 9, it immediately broke out to the upside. So any bear who sold the high of 7 is now trapped. And because of that, a lot of those bears will exit on a retest down here. And then you can see some bears, they sold the high of 8 and scaled in higher. But after 3 consecutive bull bars, probably buyers below 10. Some bulls that bought the 9 close, disappointed on 10. So they will try and exit at the 9 close, and you can see the market's testing the 3 low. Bulls buy, they scale in, they get out back at the 3 low. And then you can see 11, it rallied, tested the 9 close, turning down. But 11 is testing the 7 high, and there might be more buyers below here than sellers. 12, reversal up, testing the 9 close. So you're starting to get a lot of overlapping bars, which increases the probability of more sideways trading. 13, we have a bear bar. It's a doji. It's tight trading range, so it's basically a triangle. And then 14, we have a bull breakout. 14 is a decent bull bar. It's closing above the past couple bars. Is it by the close? I don't think so. I think the bulls need to do more. However, we will probably try and get above the 3 high. So it's reasonable to be long, stop below 12. 15, follow through bar. Probably going a little bit higher. So by the close 15. 16, another by the close bar. So reasonable to buy. And then 17, high 1 buy. And it's a bull breakout of a triangle, so probably buyers above 17, buyers below 17, not ideal to be selling above the bar. Give me just 1 more second here. So the bears that sold the 17 high are trapped on 18. They'll buy back shorts, still buy the close. 19, buy the close bar, but it's possible exhaustion, best looking bull bar in a number of bars, therefore not really ideal. And then 20, we have a bear inside bar. What about selling below 20, betting on a parabolic wedge? I would not. Probably buyers below, scaling in lower. 21, another inside bar, but probably going sideways. Another inside bar on 22, so a small triangle, possible final flag, but minor after a channel up is this tight, which means probably buyers below, scaling in lower. 26, bear breakout, closing below, all the bars to the left. Enough of a surprise bar, it might go a little bit lower, but I don't think it's worth selling. the reality is bulls will buy the close of the first bear bar breaking below this bull trend. And you can see that's what they did on 27. 25, bulls bought the low, scaled in lower, getting out break even. And you can see it led to a second leg down. Came close to the moving average on 29. It's a possible wedge, but not really a good shape. 21, 26, and 29. But there might be more sellers above than buyers. We're so close to the moving average, I suspect we'll probably have to try and get closer to it. 30, bull bar, closing on its high. And then 31, a bear bar. So you can see every time we go above, every time we rally, we sell off. And the reason is bulls are buying near the moving average and scalping out. Came close to the moving average on 34, but still finding buyers. Then over here, 35, 36, 37, we started to try and break out of the triangle. 37, 38, 4 consecutive bull bars. Is it by the close? It might be, but my concern at 38 was you're buying high in what could be a tight trading range. And if you are, better to use a wide stop and scale in. So I would not have a stop at the moving average because if anything, you know there's going to be bulls buying at the moving average. 40, bull bar breaking above 24, but then we got follow through. It's possible we go up to 4,300, the round number, but I think the reality is we may have to pull back first. I'm going to kind of speed it up. Most of this day was mostly sideways. And the reality is when you get a day like this and you get a tight bull channel like here, the rally up is so tight, the first trend line break is probably going to fail and lead to sideways trading. Why? Because bulls buy and they scale in lower, betting on sideways trading. Then, because this channel is so tight, this is a minor reversal, and the reality is this whole thing's a minor reversal. And anyways, it still led to an upside breakout. 42, possible higher high major trend reversal, but tight bull channel, minor trend line break, and then another tight bull channel. We probably need to go sideways even more. The problem the bears had is they could not get below the moving average, and when they finally got below the moving average on 57, we have a moving average gap bar. Typically, when you get a moving average gap bar in a bull trend, you go to a new high. So it's reasonable to buy above 58, taking a chance we get above 48 here. And you can see the market did right there, and then it sold off. Reasonable to exit below 65, but tight bull channel. Is it worth selling? You're selling at the moving average, just barely above it, so it's not really ideal. If a bear did sell below 65, they probably get out above a bull bar. And you can see we broke to the upside, but then we found sellers once again. If I'm a bull and I bought above 66, I'd get out below 68. Too much risk of a downside breakout. And then you can see we went sideways into the close. So overall, impressive day for the bulls. These days can be frustrating because you want the market to pull back, but every time it pulls back, it finds buyers. And the best thing to do in this situation is to just buy a small position and look to buy more lower. So traders buy on the way up, they buy pullbacks, they scalp out, buy pullback, scalp out, but they're buying. And the reality is, look at every bear bar. Every bear bar, traders immediately buy. Bear bar, another bear bar, and it goes up. Bear bar, it goes up. Bear bar, reverses up. 3 bear bars, reverses up. For stop entries, I thought the best stop entry, let me back up. I thought the first credible stop entry was buying above 7, but hard to do after 3 big bear bars in a 4-bar micro channel. Really, it's a 5-bar micro channel. Reasonable to buy above 14 or 15. You can buy above 29, but I think you need to stop below the moving average, so hard to do. And then some bulls buy above 35, 36. You can buy above 58, I thought that was reasonable. The sells are much more difficult because the odds are the first reversal is going to be minor. You can sell below 71, but again, probably minor. Same thing with 68. So I think it's hard to take those. Limit orders, lots of limit order traders trading. Bulls buying below bars, scaling in lower. Bears, would they sell above 8? I would not. Bear breakout, probably going to be a trading range. So we may have a deep pullback all the way to the bar 3 low, which means if you're selling here, you could have a very deep pullback before you get a retest back down. Trading range day, it's better to look to sell high and buy low. So when you get a breakout like 3 and the market's all the way down here, bulls are buying down here. When you get a bull breakout like 9, traders are looking to buy a retest of the breakout point because most breakouts close in trading ranges. And then probably buyers below 10, maybe sellers above, but I think it's hard to do. And buyers really below anything. Buyers below 38, buyers below 42, buyers below 48, buyers below even 55, scaling in lower, buyers below any of these lows, and bulls buying below bars in here. But I think pretty hard to trade with limit orders at the end of the day. Buy the close, sell the close. Probably buy the close on 2, but you know 80% chance you'll get a minor reversal. And is it sell the close on 6? I don't think so. I think the bears need another big bear bar, and you're just above the moving average, so not really ideal. Buy the close 9, probably okay, but you need a wide stop. And then buy the close 14, 15, all the way up to here. What about buying the close of 19? I would not. I think, if anything, bulls are taking profits, but okay to buy and buy more lower. And really, all the bear bars are better buy the close bars than sell the close bars. Let me take a look at questions. Okay, question. I wasn't sure on bar 14 or 15, these two bars, if the market was still in a trading range, which buy convinced most traders? I think the buy on 14 or 15 convinced traders we were going to go higher. It's a triangle after a gap up, so odds are you're going to get a second leg. So I think 14 or 15 is a breakout of a triangle and reasonable to buy. Question, Brad, if we had a strategy to scalp fixed 2-point profits and scale in with wide stops when necessary to break even. So let me reset the question. If we had a strategy to scalp fixed 2-point profit and scale in with a wide stop when necessary to break even, more automated, less thinking, less stress, could you please provide a comment on and your opinion on it? Yeah, so what you're in essence saying is building a strategy to scalp for 2 points and scale in using wide stops and breaking even when necessary. The concerning part I have with that strategy is the second part, using wide stops and scaling in to break even when necessary. Yes, a lot of traders do it all the time. So you sell above 1, you scale in, you make money. You buy below 3, you buy more lower, you buy more lower, you make money. You sell above here, scale in, make money. You buy below here, scale in. You sell above 12, you scale in above 10, and then you scale in above 3 here. But what do? If you sold, scaled in, you're racking up a pretty big position. And do you have the ability to correctly do the right thing here? So what if you sold all the way up? You're just going to take a really big loss. And that's the problem that traders have to figure out with scaling in, is you have to have a means to know when the market is breaking out of the market cycle. It's okay to trade, to buy below bars, scale in lower, all through here. The problem becomes when you're doing that and the market is in a trend. You cannot fade strong breakouts. The only thing you can do when there's a strong breakout is buy. So when you see 14, 15, and 16, the only thing you should be thinking about is how to buy, not how to sell. And that is the danger with using limit orders, is it seems easy. And a lot of traders, when they're trading with limit orders. They look at it all and they think, yeah, this is going to be pretty easy. But then what they fail to realize is they end up trading too large of a position. And when they start trading too large of a position, they panic and they just cannot seem to do the right thing. So for me, I would not I would be very cautious about using wide stops and scaling in, because all it takes when you start trading too large, all it takes is one or two big losses to wipe out all your winners. Okay, question. Late in a trend like bar 37 here, even if it's a logical entry, I'm not able to enter out of fear of being wrong and losing. I can't even trade one contract of options. What is the best way to deal with this kind of mindset? The best way to deal with this kind of mindset is to trade even smaller than you think you should. So when you look at bar 37 and you think, should I buy the close or sell the close? To me, one of the single best things you can do is trade a position size that's so small, it's just not even, you don't even need a stop in the market. You would think, if it fell 30 points, who cares? Obviously, 30 points is a good, it's $300 and what's $150 per micro. But either way, the reason I bring that up is trade something like the SPY. Trade so small that you can just buy and buy more lower and realize you're not going to get killed. A lot of people have a fear of not being able to use a wide stop because they end up trading for numerous reasons. But you have to realize on a day like today, when you're holding above the moving average, everything becomes a buy. But my advice to you is trade smaller. Okay, question. I didn't take the buy on the 6 high. I think you mean the 7 high here. Thinking it would touch the EMA, forming a wedge at the EMA before the buying again begins. Was it reasonable to stay out? Yeah. So strong enough breakout, reasonable to expect second leg down, which would create a wedge, 1, 7, and then down here. When you see a bar like 7 and it didn't touch the moving average, you're always wondering, is it going to need to touch the moving average before it rallies? So I think that is certainly okay. Can you number the bars on TradeStation, or do you need an indicator? You need an indicator to do that. Question. Is this not possible? Is this a possible wedge top? Bars 24, 42, and 48. It is, but my problem with that argument is possible wedge, yes, but look at the wedge. 1, 2, 3. It's not symmetrical. Point 1 and point 2 is pretty big in space, and point 2 to 3 is pretty small in space. It's not really ideal. Question, is it possible the market might pull back until the middle of the triangle? This was at 1252. So maybe the triangle is here or here. I'm not sure which one. I thought the market could maybe pull back here, but we just couldn't get a strong enough breakout. More of a comment than a question. I've noticed these small pullback bull trends, squeeze days for the past several weeks are being brought almost perfectly to the 10-period moving average, not as often to the 20-period moving average. Not that this is relevant to Al's work or BTC or whatever. Yeah, they're saying that days like today, the market tests the 10-period moving average a lot more frequently. And that's true. You can see test, 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 test. And obviously, we could take the opposite. Let's go to a 30-period moving average. We only touched it once. So what's the difference between those? There's not much of a difference. The reason I say that is the smaller obviously the average is, if it's 10, then it's going to be more difficult for the market to stay away from a 10-period moving average. Obviously it sounds crazy, but if you go to a 5-period moving average, obviously you're only going to be above it for maybe 1 bar. The 5-period moving average, obviously you're only going to be above it for maybe 1 bar. But in general, when the market is above the moving average for several bars, assume it's a strong trend. Let me try to make this box bigger. Okay, I am rereading Al's first book where devoting an entire chapter to trend lines I'm drawing them on charts to stay in trades and enter in micro channels and tight trading ranges. Trying to get comfortable with the idea that let me just read the question. Some of these questions are fairly long. It was more of a comment, but this person's saying that let me come back to that question. Okay, here's another question. Was 7 an okay buy? I figured both the bulls and the bears needed a second leg. I agree with that. But I have trouble with these types of reversals where I'm expecting a second leg from the other side first, bears in this case. And if you do buy, you probably have an exit at the 3 low, which isn't good risk reward. Yeah, so that is the problem with trading ranges, and I totally agree with what they're saying. So if you buy above 7 and you put your stop somewhere down here, an obvious target is the 3 low, but you know if the market gets to the 3 low, it's probably going to pull back. Why? Because if you bought the 3 low, you know that traders buying here are going to be disappointed. If you bought the 3 low and scaled in, you're disappointed, which means, or any sort of rally, you're going to look to sell. So a bull buying here, you know there's sellers up here, but you can see the risk reward. It went basically straight up. But that is the problem with trading ranges. Trading ranges, the risk reward never looks great, and usually it's forcing you to buy in some form of a micro channel, and the pullbacks are deep. Why? Because when you see this bar and then you see this upside breakout, you know the bears that sold here and scaled in probably can avoid a loss, which means there's going to be a deep pullback. Okay, here's another question. We haven't gotten, this was at 12.12 over here. We haven't gotten 3 closes below the moving average today. Would you buy the first touch of the moving average nonetheless and scale in lower if it does get to the 3 closes below the moving average? Traders did that. So traders are buying on the way up. And somebody bought right here. Let's just pretend. They bought the high of 52. What are they going to do if the market falls below? They're going to buy more. Bulls that bought the moving average, guess what? They bought lower and they got out break even. Okay, question this was asked at 12 over here. Brad, is there a reason we need to pull back because the bulls need to reset their risk, or is it because price is too far from the moving average? It's both. So the moving average is a fair price. It's an average price. It's a baseline, if you will. And traders are willing to pay above average for a certain period of time, but eventually they're not going to be willing to buy above average. So this moving average is a fair price. That's the way I see it, and that's the way Al always explained it. This is a fair price. And if the market's constantly above the moving average, traders are willing to pay above average when you see this. However, what are they going to do at some point when the market starts to go sideways? No one's going to want to pay above average. Everyone wants to start buying closer to the moving average. But when the market's been away from the moving average for 20 bars, everybody's happy to buy at the moving average. And a lot of traders get worried it's not going to get to the moving average. It's kind of like 4,300. The high of this bar is 97.75. So we came within 2 points of 4,300. I actually have that trend line a little bit off. It's 3 ticks off. But anyways, we came within 2 points of 4,300, 2 points and 1 tick. A lot of traders, they look at 4,300 and they just sell. They'll sell 2 points below it, betting that we might sell off before we get to 4,300. So the more obvious the support level is, like the moving average, the more aggressive traders might be to buy above it. But also, you're right, the risk gets too big. Eventually, you have a breakout and the probability gets worse and the risk reward gets worse and worse, and eventually the probability starts to favor pullback, like after 19. So everybody starts to sell and look to buy lower. Question: if the market does pull back to the moving average, are we expecting a wedge bottom? This was at 1139 right here. A wedge bottom with 21, 29, and right here. Sure. You can argue it's a truncated wedge, not with 20, 21, 29, and then 34. 34 tried to form a wedge, but there were too many buyers. And a lot of traders looked at it that way. They thought there's probably buyers. Everyone thought buyers below 29, let's say. So what are they going to do on 34 as it gets close to 29? They're going to start buying just in case it doesn't get to 29, and that creates a truncated wedge. Brad, do you take trades that and hold for days or weeks? Like, for example, it could be something like holding yesterday's trend to follow through with today's trend. Not really so much. I just mainly trade intraday, but a lot of traders do that. You get a big bull bar, reasonable to buy, taking a chance to get an upside breakout. Consecutive bull bars, bulls will buy the first reversal. So they may do it with options. There's several ways you can do that. But just because I'm not doing that does not mean that there's not a lot of traders and institutions doing that. Hi, Brad, regarding gaps, is it correct to say this gaps always indicate continuation during a trend? But once you have a double top, double bottom, wedge top, or wedge bottom, or major trend reversal, then those open gaps are like targets and magnets to the other side. Yeah, open gaps are magnets. Why? I talked about that here. So the 17 high is a possible area where bears could sell. They sell 17 and they scale in. But look what happened on the sell-off to 29. They got trapped on the high of 17. So the bears that sold here and scaled in get trapped on the pullback. So what are they going to do on the retest? They're going to buy. Over here is an easier example. You're in a trading range. Every gap is going to close. It's just a matter of time. So you have an open gap, 3 low, 5 high. Guess what's going to happen? You get a downside breakout and then a deep pullback. You're going to close these gaps. And everybody knows that. But then when gaps start to stay open, traders become concerned it's a trend. So look at the 14 low and look at the 15 low and the 13 high. It's an open gap. And the reason why that concerns traders is because open gaps they trap counter trend traders. But in a trading range, eventually gaps close and they get retested. So like right here, 39, we broke to the upside. We created a gap, 39 high, 43 low, but then we went a little bit higher. We closed the gap. I hope that answers that question. Okay, question. I entered on the breakout of bar 37 here. I think that's okay. Thinking it was a reasonable trade. At the same time, I was prepared to add at the moving average. I think that's good. Target was a measured move of 20 to 34. So I'm not sure. Oh, okay. So you had a target of this tight trading range going up. I think it's okay. My concern with buying here is once we start to get 2 legs up and then sideways, I would scalp out because I think the odds are we're going to touch the moving average. Okay, last question. I'm rereading Al's book where devoted entire chapter to trend lines. I'm drawing them on charts to stay in trades and enter in micro channels and tight channels, I believe. Trying to get comfortable with the idea that that trend line breakouts will have a retest. So what he's saying is he's buying on the way up. He's drawing a trend line like right here, getting used to the idea that the market is that the first trend line break will fail and have to get retested. So he's drawing a trend line here, getting used to the idea first trend line break will fail and have to get retested. Unfortunately, yesterday's 30-minute chart, okay, I reread that wrong. So I was getting comfortable with trend lines, having to retest. Unfortunately, yesterday, 30 minutes into the close here, I gave up 60% of the profit. Yeah, I was adding relentlessly on every strong bull, bar, in a tight channel throughout the day on my SPY account. Well, the first thing is you're trading the SPY, and I think that is a fantastic idea because you can screw up in a lot of ways and screw up with really, really small trades. And because of that, I say screw up in a positive way, because when you mess up, you can learn from it and you can fix the mistake, but you won't blow your account doing something dumb. But anyways, my problem here is you have a bull trend and then you have a trend line break. And once you have a trend line break, you always have to wonder if you're going to be in a trading range. Tight bull channel, no matter how strong the breakout is, it might just be a larger trend line break. So let's go to a 20-minute chart. There's a bull trend, trend line break, and a new high. 15-minute chart, rallied, trend line break, new high. Let's look at it on the perspective of a Globex chart. Yesterday, we rallied, trend line break, and then we drifted sideways to up. So I totally get it. And this trend line break is a vacuum test of support. But for me, if I'm trading a 5-minute chart, at some point, once we're sideways for a lot of bars, I assume that we're going to get below the moving average. And once I see second entry shorts, I'm exiting. Why? Because I don't know how deep the pullback could be. But if I'm long and I see 70 and 71 and then 72, I'm getting out below 71 for sure, and definitely on 72. So it looks like that's it for questions. Let me check Discord, and then I'm going to wrap up the webinar. But overall, fun to see a breakout of this trading range, and we'll see what happens on Monday. So far, good looking start to the month, but trading range, I wouldn't be surprised if we rallied and then sold off, but who knows? All right, hope everyone has a good rest of their weekend.